Very good morning. So yesterday we were discussing perquisites. In those perquisites, we were in section 17, subsection 2, clause 8, if you recollect. In that first point was interest-free loan, concessional loan. We have discussed this, and we have also done a practical question on it. That was question number 10. We had skipped this point number 2. So now we are doing this point number 2. Point number 2 is value of perquisite in respect of traveling, accommodation, touring, other expenses. See, for example, if you want to go somewhere with your family for a vacation, the first expenditure which you would incur would be a traveling expenditure to go to that destination. Number 2, when you reach there, you will stay in a hotel, so you will incur the accommodation cost. Number 3, you did not go there to stay in a hotel. You go there to visit different places. So you will incur touring expenses and other expenditure. Touring expenses, and then whatever balance expenditure is left, we can put it into other expenditure. So this point is covering 4 expenditure. Number 1, traveling. Number 2, touring. Traveling, accommodation, touring, other expenses. Now see, traveling, accommodation, touring, other expenses at the cost of employer. Traveling, accommodation, touring, other expenses at the cost of employer. So I am writing in shortcut, traveling, accommodation, touring, other expenses. This we can divide in 2 parts. Number 1, you are on an official tour. You are on a official tour. Or number 2, you are on a personal tour. So there are 2 possibilities here. See, if you are on an official tour, generally nothing should become taxable to you. Generally, nothing should become taxable to you. So left hand side we have 2 possibilities, 1 and 2. Right hand side we have 4 possibilities. First of all, we'll move on to left hand side. Some cost is incurred with respect to traveling, accommodation, touring, other expenses when you are on an official tour. Whenever you are on an official tour, there is no personal benefit to you. There is no personal advantage. So nothing should become taxable to you. But in this official tour, if you have got some personal advantage, then the extent to which you have got some personal advantage, to that extent something should become taxable. When can we say that in an official tour you have got some personal advantage? Now there is a table here. I will try to convert this table into a small flowchart. But before that, you already know that what is the general rule for valuation of perquisite? If I ask you what is the general rule for valuation of perquisite, it is what? I had discussed with you yesterday. General rule for valuation of perquisite equals to what? Taxable value of perquisite equals to number 1, amount incurred by employer. Whatever expenditure employer has incurred for your benefit, that should be taken. From that, you should deduct amount recovered from employee. This is the normal rule. This is the general rule which can be applied at most of the places. It can be applied at most of the places. So keeping in mind this general rule, we'll try to understand this point: traveling, accommodation, touring, other expenses. Say for example, Manoj is going on an official tour. Manoj is going on an official tour, but that official tour is accompanied by his wife. Manoj is going on an official tour, but that official tour is accompanied by member of household. What do you mean by member of household? Member of household, you have the definition. Member of household includes number one, spouse, number two, children and their spouses, number three, parents, and number four, servants and dependents. Whenever you are on an official tour, but you are accompanied by a member of household, then whatever expenditure employer is incurring for you, it is incurred for official purpose. But whatever expenditure your employer is incurring for that member of household, that member of household is not on an official tour, he is on a personal tour. Say for example, I came to take lectures in Chennai. I came to Chennai along with my wife. Then I am on an official tour. My wife is not on an official tour. But say for example, inside commerce studies has incurred some expenditure, flight cost for both of us. In that case, we can say that it is an official tour accompanied by member of household. Whatever amount they have incurred for me, I am on an official tour, so nothing should become taxable to me. For example, I am an employee of Inside Commerce Studies. In that case, when I visit Chennai, I visit along with my wife. So I am on a official tour, but my wife is on a personal tour. Whatever cost is incurred for me, there is no advantage because I am on an official tour. But whatever cost is incurred for my wife, whatever cost is incurred for spouse, yes, there is a personal advantage. So in that case, something should become taxable. What should become taxable? We should apply the general rule. Amount incurred by employer minus amount recorded from employee. For example, they have incurred a cost of 30,000 for my wife. In that case, say for example, they have recovered 10,000. I paid them 10,000 rupees only. So what is my benefit? 20,000 rupees. 20,000 is my benefit. But my wife is on a personal tour. So only the cost relating to my spouse should be taken into account. I am on an official tour. There is no personal advantage. Nothing should become taxable to me. But my spouse is on a personal tour. So here taxable value of perquisite equals to amount incurred by employer for whom? For member of household. Amount incurred by employer for member of household minus amount recovered from employee. Amount incurred by employer for whom? For member of household minus amount recorded from employee. Have you understood this point number one? Official tour first possibility. Is that very clear? Yes or no? Once again. Okay. Listen to me carefully. Say for example, I am working as an employee of Inside Commerce Studies. I am a full-time employee of Inside Commerce Studies, and Inside Commerce Studies is having a branch at 5 different locations in 5 different cities. They are having branch at Mumbai, Delhi, Kolkata, Chennai, and Pune. So I'll be taking lectures in all these cities. I am having my own house at Mumbai. I am residing at Mumbai. So Mumbai, definitely I'll take the lectures. But when I come to Chennai for taking the lectures, I am on a which tour? Official tour or personal tour? Definitely official tour because I am coming here to take the lectures. At the beginning of the topic, perquisite itself, I told you that perquisite can become taxable only if there is a personal advantage. If there is no personal advantage, nothing can be taxed. Say for example, I am taking lectures here, they have kept the AC on. The ACs are on. So they are incurring some cost now. But I don't get any personal advantage out of it. This facility is given to me for performance of my duties. Similarly, when I travel from Mumbai to Chennai, they would incur some traveling cost. They would also incur hotel expenses. So all these expenses are incurred for official purposes. I am on an official tour, I am doing the official work. At that point of time, if some facility is provided to me, then there is no personal advantage to me. In that case, nothing will become taxable. Nothing will become taxable. Have you understood this much? Yes? Okay. Now further I say that, say for example, when I came to Chennai for taking lectures, I came to Chennai along with my wife. So I am on an official tour now, but my wife is not on an official tour. She is on a personal tour. She is not working with inside commerce studies. So when I came to Chennai, I came along with my wife. So I stayed in a hotel along with my wife. So whatever cost inside commerce studies is incurring, they are incurring for me as well as my wife. They have to incur flight cost for two persons. They have to incur stay cost for two persons. They have to incur food cost for two persons. So whatever expenditure they are incurring for me, that is incurred for official purpose because I am on an official tour for taking the lectures. But whatever cost they are incurring for my wife, that is not incurred for official purpose. Here there is a personal advantage because my wife is not on an official tour. She is on a personal tour. She is on a personal tour. So whatever cost inside commerce studies is incurring for my spouse, for my wife, that amount is a personal advantage which I have received. Whenever there is a personal advantage, taxability will arise to the extent there is a personal advantage. Now say for example, we stayed here for say 25 days. We stayed here for 25 days. During that 25 days, inside commerce studies has incurred an expenditure of total 1 lakh rupees for example. So that 1 lakh, out of 1 lakh, 50,000 would be incurred for me, 50,000 is incurred for my wife. So whatever is incurred for me, there is no advantage, there is no personal advantage because I am on an official tour. But whatever is incurred for my wife, yes, there is a personal advantage because she is on a personal tour. So inside commerce studies has incurred say 1 lakh rupees in all. So that 1 lakh is incurred equally for both of us. So the proportionate amount which is incurred for my spouse is 50,000 rupees. Here there is a personal advantage. Now inside commerce studies said that sir, do one thing, you just reimburse us you give us back the amount of flight cost which was 12,000 rupees. So I have paid them 12,000 rupees. How much money they had incurred for the benefit of my wife? 50,000. How much I have paid them? 1 to 12,000. So to what extent I have got personal advantage? 38,000. This 38,000 should become taxable to me. Yes, is that very clear? Okay, so this was first possibility. This was first possibility. Second possibility. Second possibility is official tour is extended as vacation. Official tour is extended as vacation, meaning thereby, I will give you an example to make you understand. For example, generally I visit Chennai for a period of 6 days. I take a flight at Sunday evening. I reach here Sunday evening. I take lectures from Monday to Saturday, and Saturday evening I take the flight and go back to Mumbai. So I generally visit Chennai for 6 days. Whenever I visit Chennai for 6 days, I have lectures for 10 hours a day. 10 hours a day I have lectures, for example. So in 6 days I will be taking lectures for how many hours? 60 hours. 60 hours. Now, after taking lectures for 10 hours a day, I don't have the energy left to go out and roam around. So if I take along my wife along with me to Chennai, She is here not for official purpose. She is here for personal purpose. So she would like to visit different places in Chennai. After taking lectures for 10 hours, I don't have the energy left that I can go with her and enjoy different places at Chennai. So when I visited next time, what I planned was my visit of Monday to Saturday. I had cut short that visit from Monday to Friday. Whatever work I was supposed to do in 6 days' time, I will complete that work in 5 days' time. For example, I am supposed to take a lecture of 10 hours every day for 6 days. So that total works out to say 60 hours. Now that same 60 hours work I have done in 5 days. Monday to Friday, I'll be taking lectures for 12 hours a day. Now how this visit is planned now? Monday to Friday, only I alone will come to Chennai. So from Monday to Friday, I'll be taking lectures for 12 hours a day and I alone will be coming to Chennai. Saturday morning, my wife will pick up the flight and she will come here. Saturday, I don't have any lectures. Sunday, I don't have any lectures. So Saturday, Sunday, from here, we'll go to Tirupati, we'll come back, and then we'll catch the flight from Chennai and we'll go back to Mumbai on Saturday evening. So total tour was from Monday to Sunday. How many days? 7 days. But out of these 7 days, the official work was carried on only for 5 days. Monday to Friday. The Saturday, Sunday was extended as vacation. So Monday to Friday is the official tour. This official tour is extended by 2 more days, and these 2 more days I am not on an official tour, I am not doing any official work. These 2 days I am enjoying a vacation. So these 2 days I am also enjoying a vacation, my wife is also enjoying a vacation, and she was here only for 2 days. I was here for 7 days. But out of 7 days, 5 days was for official purpose, 2 days for personal purpose. For that 2 days, Saturday and Sunday also, Inside Commerce Studies has incurred some expenditure. They have incurred some expenditure for me also, for my wife also, for Saturday as well as Sunday. So entire cost incurred for Saturday, Sunday, that is vacation period of 2 days, that entire cost is my personal advantage. That should become taxable to me. Cost incurred for me as well as my spouse. Both the cost is a personal advantage because I am on a personal tour. I was on an official tour, but now that official tour is extended as vacation for 2 days. So I am on a vacation. My spouse is also on a vacation. So for 2 days, whatever cost Inside Commerce Studies has incurred, that is a personal advantage to me. For those 2 days, that cost should become taxable to me. Have you understood the example? Yes? Now you tell me what should become taxable to me? What should become taxable in that case? If official tour is extended as vacation, what should become taxable value of perquisite? Taxable value of perquisite equals to what? Apply the general formula. Amount incurred by employer for extended period. That is for Saturday and Sunday. From that I should deduct what? Amount recovered from employee. Amount recovered from employee. Have you understood this? Yes or no? Amount spent by employer for vacation, that is Saturday, Sunday, minus amount recovered from employee. Balance is taxable value of perquisite. Okay. So left hand side is over. What is left hand side? Official tour. In official tour, some personal advantage is taken. Then the extent to which personal advantage is taken, to that extent taxability would arise. Now we move on to the right hand side. Personal tour. Right hand side is personal tour. Now for example, Inside Commerce Studies is having branches at 5 different locations. So They contacted me. Tarun sir had a meeting with me saying that, sir, we are having branches at 5 different locations. So if you can work for us, we can provide you adequate amount of work. You can teach CA intermediate income tax as well as CA final income tax. We can also have your video lectures recorded. All these things can happen. I told that how much hours of work you can provide me. So he said that I have adequate hours of work. Don't worry about that. We sat and we did the calculation. But I put it one condition forward to him, saying that you have to provide me at least 8 hours of work a day. That is the condition which I put forward to him. So he says, sir, in that case, if you want, you can teach CA foundation accounts also. You have taught in past. So that is also fine with me. I put one more condition saying that once in a year, I will visit any place for my leisure travel, for a vacation. And that cost you have to incur. That cost you have to incur. Once in a year, I'll have a personal tour anywhere. Whatever cost is incurred, that cost you have to bear. So he readily agreed for that. So in our employment contract, it is clearly written that employee can have one tour, one personal tour in a year, and the cost of that personal tour will be borne by employer. That cost of personal tour will be borne by employer. In that case, how the taxability would arise? How the taxability would arise? Darshini madam, if employer is incurring say 50,000 and employer is recovering 50,000 from me, then what is the benefit to me? No benefit. Say for example, I spend you 100 rupees for you. I bought breakfast. I bought breakfast for you and I incurred 100 rupees. I gave that breakfast to you and I charged you 100 rupees. Have you received any benefit? Is there any benefit to it? No. So when employer is incurring some amount and is recovering the same amount from employee, then there is no benefit now. So nothing should become taxable. Taxability would arise only when employer is recovering something less than what he is incurring. Say for example, if I incur a cost of 100 rupees for breakfast and if I offer you that breakfast and I charge you only 20 rupees, I charge you only 20 rupees, then what is your benefit? I had incurred 100 for you and I have charged only 20 to you. So 80 is your benefit. Similarly, here also, whatever cost employer has incurred, if he is recovering the entire amount, there won't be any benefit. But he is recovering less amount, then there would be a benefit. Is that very clear? Okay. Now we move on to the right hand side, that is personal tour. See in our notes we have completed point 1, point 2. Official tour is accompanied by member of household. Official tour is accompanied by member of household. In that case, amount incurred by employer for such member of household minus amount recorded from employee is taxable value of perquisite. Second possibility is official tour is extended as vacation. In that case, taxable value of perquisite is amount incurred by employer for such extended period. In our example, Saturday, Sunday was the extended period. Minus amount recovered from employee. Minus amount recovered from employee. So first 2 points we have completed. Now let's move on to next part, that is personal tour. Personal tour is divided in 4 parts. Personal tour is divided in 4 parts. Let me explain you. First of all, let me explain you 4 different possibilities here. Here we say that First possibility is facility is maintained by employer. Facility is maintained by employer. And second possibility is facilities not maintained by employer. In that, facility is given or let me take some less space so that you can see properly. Personal tour. Number one, facilities maintained by employer. What do you mean by facilities maintained by employer? For example, you are working with Reserve Bank of India. You are working with Reserve Bank of India, RBI. Now, RBI is having their own guest house at Ooty. RBI is having their own guest house at Ooty. So, if you are an RBI employee and if you want to go to Ooty along with your family, you can go there and stay in RBI guest house. So, that facility is maintained by your employer. That facility is maintained by your employer. This is one possibility. Another possibility is facility is not maintained by employer. Facility is not maintained by employer. Say for example, I am working with Inside Commerce Studies. Inside Commerce Studies is not maintaining any guest house at Ooty. They do not have any guest house at Ooty. I am working with Inside Commerce Studies. I am going on a personal tour to Ooty. But Inside Commerce Studies do not have any guest house at Ooty. So where I'll reside when I go to Ooty, where I'll reside? I'll reside in a hotel. I'll stay in a hotel. So that hotel is not maintained by Inside Commerce Studies. That facility is maintained by other person. Facility is maintained by other person. So we say that facility is not maintained by employer. First of all, have you understood these two distinctions? Facility is maintained by employer, facility is not maintained by employer. Yes? Facility is maintained by employer means employer is maintaining a guest house at that place. You can go to that place, you can stay in the guest house. Facility is not maintained by employer means facility is maintained by some other person. So you are going there, you are staying in a hotel. In that case, we say that facility is not maintained by employer. Now this is further divided in two parts. Both these are further divided in two parts. Number one, such facility is not given to all employees. Such facility is not provided to all employees. And number two, such facility is given to all employees. Facility not given to all employees means what? Facility is not given to all employees means, say for example, you are working with an RBI and the policy which RBI has made, they have clearly written only those people who are working at the position of senior manager and above, Only those people who are working at the position of senior manager and above can go to UT and stay in guest house. Means those people who are working at a lower level, they have not provided facility to them. They have provided facility only to specified group of employees, special employees working at a higher designation. In that case, we say that facility is not given to all employees. Facility is not given to all employees. But if RBI makes a policy saying that every employee has the right to go to UT and stay in RBI guest house, even the person working as a watchman, as a security guard in RBI office can go to UT and stay in RBI guest house. If that is the policy which is made by RBI, in that case we say that facility is given to all employees. Yes, have you understood the difference very clearly? Point 1, point 2, have you understood the difference? Yes or no? Yes. Similarly, here also we have two possibilities. Facilities not given to all employees and second possibility, facilities given to all employees. Facilities given to all employees. I think there is no need to explain this now. When facilities given to all employees means whether employees working at a higher designation, lower designation does not make a difference. To everyone, uniform facilities are given. Same facilities are given. So now we have made 4 different possibilities. Have you understood these 4 different possibilities? Using 2 parameters, we have made a 4 different combination. What is the first parameter? What is the first parameter? Facility is maintained by whom? That is the first parameter. Second parameter is what? Whether the facility is available to all employees or it is not available to all employees. Using these 2 parameters, we have made 4 different combinations. First combination is what? Facility is maintained by employer and such facility is not available to all employees. For example, I told you that RBI has maintained the guest house at UT, but only people working at the position of senior manager and above can visit there. So that facility is maintained by employer and that facility is not available to every employee. It is available only to those employees who are working at the position of senior manager and above. So that is the first case. Second case, RBI has provided facility equally to every employee. Then in that case, we say facility is maintained by employer and such facility is available to all employees. Third possibility, facility is not maintained by employer. So when I go on a personal tour, I would definitely stay in a hotel. And such kind of personal tour benefit is not given to all employees. Only those employees who are working at a position, higher position, they are given such advantage. For example, in inside commerce studies, they have started with 8th standard, 9th standard, 10th standard, 11th standard, 12th standard. They have started providing coaching to all these standards. But say, for example, this facility of personal tour is given only to those teachers who are working at CA final, who are taking lectures for CA final. So, in that agreement, they have clearly mentioned that one personal tour you can have at the cost of the company. But that is written in the agreement made with all those teachers who are teaching only at CA final. So a CA final teacher can go at some place, he can stay in a hotel, he can have a personal tour, he can stay in a hotel, and cost will be borne by inside commerce studies. In that case, we say that facility is not maintained by employer and facility is also not given to all employees. It is given to certain specific employees. And the last possibility, if employer has made a blanket policy saying that any of the employee can go anywhere in the country and one personal tour cost will be borne by the employer. In that case, we say facility is not maintained by employer and facility is given to all employees. Now, can you tell me out of this four possibility, in which possibility there is a partiality done to specific category of employees? Out of this four possibility, in which possibility or in which combination some partiality is being done? Partiality is done in point number 1 and 3, because in point number 1 and 3, Soumya, if I say for example you are all are attending face-to-face classes, in the break we have provided breakfast to every one of you, and in that breakfast we have offered 4 idlis to everyone. We have offered 4 idlis to everyone. But Manoj, to Manoj we gave 4 idlis and 2 vadas. So we are doing partiality, yes or no? When we give same thing to everyone, there is no partiality. But if we provide some extra facility to particular employee, definitely there is a partiality. So here there is a partiality in combination number 1 and combination number 3. Now you tell me, out of 1 and 3, where employer can manipulate the cost? Where employer can manipulate the cost? Meaning thereby, he will incur say 40,000, but he will say, no, I have not incurred 40,000, I have incurred only 10,000. Why he will do so? If he says I have incurred 40,000, then 40,000 will be added to employee's income and tax will be levied on 40,000. But if he says I have incurred only 10,000, then only 10,000 will be added to employee's income. So the question is, where he can manipulate the numbers? Can he manipulate the numbers when the facility is maintained by a hotel? Can Inside Commerce Studies manipulate the hotel bill? Answer is no. But can Inside Commerce Studies manipulate the cost when they themselves are maintaining the facility? Yes. Say for example, Inside Commerce Studies is maintaining a guest house at Ooty. I go there and stay for 7 days. During those 7 days, they have incurred a cost of say 50,000 for me. They have incurred a cost of 50,000. But officially they are saying that we have incurred only 20,000. Why? Because if they say that they have incurred 50,000, 50,000 will be added to my salary, tax will be levied to me on 50,000. So to save my cost, to save my tax, they say that we have incurred only 20,000. So only 20,000 will be added to my income, tax will be levied only on 20 instead of 50. So they can manipulate the cost only when they are incurring. When they themselves are spending, they can manipulate. But when they are paying bill to some third party, they cannot manipulate. The chances of manipulation is too less. Are you understanding? Yes or no? It should be very much clear. Sir. You should not have any doubt. If you have doubt, I'll give some other example. Yes? Every one of you have understood very clearly. Okay. So there is high chance of manipulation in which possibility? Which combination there is a high chance of manipulation? Out of 1 and 3? Only in one, because in one the cost is incurred by employer. In one, employer is incurring some cost, so he may spend more and he can say that I have spent less. Why? With the intention to save employees' tax. So what government has done the perquisite valuation rule for first possibility are different and perquisite valuation rules for second, third and fourth possibility are same. Perquisite valuation rules for second, third and fourth possibility are same. There is no change. So per-quid valuation rules are different only in the first possibility. Second, third possibility, per-quid valuation rule is same. What is that? You apply general rule. What is general rule? Taxable value of per-quid equals to amount incurred by employer minus amount recovered from employee. Apply the general rule in second, third and fourth possibility. Is that very clear? Yes or no? Shall I proceed? Okay. Now, what is the per-quid valuation rule in case of first possibility? Now, let me give an example. Inside Commerce Studies is maintaining a guest house at Ooty. I went to Ooty, stayed there for 7 days, and during those 7 days, they have incurred a cost of say 50,000 for me, but they are saying that they have actually incurred only 20,000. Why they are manipulating the numbers? With the intention to save my tax. So there are high chance of manipulation. Therefore, government says whatever cost employer has incurred now will not take into account for the purpose of valuation of perquisite, because we are confident that he may manipulate the numbers. So government says here we will take up the cost with other persons are charging to the general public. Means in Ooty there are different hotels also now. Instead of staying in my employer's guest house, if I go to hotel and stay for 7 days, what would be the cost? Say for example, if I go in a hotel and stay for 7 days, the cost would be say 70,000 rupees. And this 70,000 will be taken into account for the purpose of valuation of perquisite. Whatever actual expenditure is incurred by employer will not be taken into account because that expenditure amount can be manipulated by the employer. So government says don't take that amount incurred by employer into account. What do you take into account? You take how much amount is charged by other people, other hoteliers to the general public. If you go on a personal tour and you stay in a hotel for 7 days, what cost you would generally incur? That amount will be taken into account. Amount incurred by employer will not be taken into account. Have you understood this? Yes or no? So, point number one, what it says? See, what I have done now, these four possibilities, I have merged into two only. Because in second, third and fourth, per-quid valuation rule is same. So I have combined all of them. Only first possibility I have segregated. What is first possibility? Employee is on a personal tour, facilities maintained by employer, and such facilities are not available to all employees. In that case, what should be the perquisite value? Amount charged by other agencies. Other agencies means other hoteliers. Amount charged by other agencies minus amount recovered from employee. Minus amount recovered from employee. Yes, is that very, very clear? Third point is clear? Yes or no? Okay. Now let's move on to last point. Personal tour, other cases. What do you mean by other cases? Combination number 2, combination number 3 and combination number 4. Combination number 2, 3 and 4. In that case, you apply the general rule, amount incurred by employer minus amount recovered from employee. Is that very clear? So with this we have completed this possible, with this we have completed this perquisite traveling, accommodation, touring, other expenses. Now Deva is asking me, sir, in case of second possibility also, employer can manipulate the things, na? In case of second possibility also employer can manipulate because he is incurring cost. See, in this case he will not manipulate because his intention appears to be non-manipulative because he has provided facility to everyone. When I provide facility to everyone, I do not discriminate between different employees. Then why I would help some of the employees to save the tax? Are you understanding? But when I do partiality in providing facility itself, in that case my intention to manipulate the things is clearly visible. Therefore, government says there are more chances of manipulation in point number 1 only. Therefore, point number 1 they have made a separate rule. So, traveling, accommodation, touring, other expenses is over. Free meal refreshment is over. This got completed yesterday itself. Gift voucher token is over. Expenses on credit card, club facility is over. Now we move on to 7th perquisite. We are in which section? We are in section 17, subsection 2, clause 8. Fringe benefits as may be prescribed. In that, we have completed 6 perquisites. The first one was interest-free loan, concessional loan. Second one we did right now, traveling, accommodation, touring, other expenses. Third was free meal and refreshment. Fourth one was gift by the employer. Fifth was credit card facility. Sixth was club facility. Now we go on to the 7th one, that is use of movable asset. Use of movable asset. What do you mean by use of movable asset? Employer has given some asset to use. Employer has given a movable asset to employee to use. What can be a movable asset? Vehicle can be a movable asset. Employer can give vehicle to the employee. Number 1. Number 2, employer has given furniture. Employer has given furniture. Employer has given laptop. Employer has given mobile phone. Employer has given tab. Any mobile asset. Employer has given video camera. So there can be n number of assets which employer can give to employee for using it. He can just use. So in that case, if employee is using that asset free of cost, he is using employer's asset free of cost, definitely there is a advantage. So whatever advantage is there, it should be valued monetarily and that amount should be added to employee's income. So we are talking about this point number 7. In that case, use of movable asset. Assets are divided into 3 categories. Number 1, computer, laptop and telephone facility. Employer has given you computer, laptop or a telephone facility. See, do you believe that employer is going to give you a laptop saying that keep this laptop with you, you can use this for your children so that they can play video games? Will someone provide you a laptop saying that use this laptop for playing video games? No, na. Laptop will be provided only when the nature of job demands usage of laptop. For example, you are working as an accountant in any multinational company, then they would provide you laptop. They would provide you telephone facility also. They would provide you along with mobile, along with laptop, they would also provide you data card for internet connection. Why they are providing all those things? So that you are always traceable. If you work in a multinational company, that company might be located in multiple countries. So when it is 6:37 or 7:30 in the evening here, you are leaving your office. But people in Canada, they are coming to office. So they may email you. For them it is morning. They may drop a email in the morning to you, but here it is evening. So you have received an email at the evening. And you are required to submit a report within 2 hours. And that report is required to be submitted to Canadian government authorities on an immediate basis. So in that case, if you leave office, then you are going to come tomorrow morning only. Therefore, multinational companies would generally provide you laptop, they would provide you mobile, they would also provide you data connection. So the moment you leave office and you are traveling to home, your boss will call up saying that this file is to be made immediately. So once you reach home now, there also you will open the laptop and you will work. So laptop is provided, telephone is provided not for your benefit, for company's benefit. It is provided for company's benefit. But in that laptop, say for example, when you go home, your children are playing video game for say 10-15 minutes a day. Definitely there is a personal advantage to that extent. But is it possible to measure it? Is it practically possible to find out to what extent or for how much time it was used for personal purpose? Practically it is nearly impossible. But it is implied that laptop, telephone facility, this will be provided to employee when the nature of job demands it. When the nature of job demands it. If the nature of job demands that employee should be available 24/7, he should be always available on a call, then free mobile will be provided to employee. So in that case, we say that this laptop facility, telephone facility is given not for your advantage, but for the advantage of employer, for the benefit of employer. In that case, we say nothing is taxable, taxable value of per quid is 0. Yes, have you understood this point number 1? Yes. Let's move on to second point, motor car facility. Employer has provided you motor car. Employer has provided you car. In that case, definitely something is going to be taxed to you. But how much amount will be taxed now? That we will discuss separately. For a motor car facility, we have a separate flow chart of entire page. Similar to that rent-free accommodation, we had one full page flow chart. Similar flow chart is also there for motor car. That will be discussed separately. Third thing is any other asset. What do you mean by any other asset? By any other asset, we need to say except computer, laptop, except mobile phone facility, and except motor car facility. Keeping aside these three things, if any other movable asset is provided to employee for using, then we'll move on to third category. Now, before we actually move on to discuss this, do you recollect section 17 subsection 2 clause 1 rent-free accommodation? In that we had unfurnished accommodation, furnished accommodation, hotel accommodation. In that unfurnished accommodation, I told you, furnished accommodation, I told you that valuation is required to be done in two parts. In case of furnished accommodation, valuation is required to be done in two parts. First of all, you find out the perquisite value of unfurnished accommodation, then you separately find out the perquisite value of furniture. You separately find out the perquisite value of furniture. So in that furniture, what was the rule applied for valuation? Whether that furniture is a owned furniture or leased furniture. If it is a owned furniture, then you took your favorite rate of depreciation, favorite method of depreciation. That is 10% SLM. 10% of actual cost was considered as perquisite value. And if it was a leased furniture, then whatever was the higher charges paid by your employer for that furniture was taken as the perquisite value. Same to same thing we have imported from there and we have written here. So any other asset, you have to see whether it is owned or whether it is leased. If it is owned, you take 10% per annum of actual cost. If it is leased, you take actual higher charges payable by employer. From that, you deduct amount recovered, if any. If some amount is recovered by your employer, you deduct that amount. Balance will be taxable value of perquisite. Balance will be taxable value of perquisite. Yes, have you understood this? Yes or no? Yes. So with this, our point number 7 is over. Today, it's already around 8 o'clock. We have done only 2 points in a span of 1 hour. But I am very much sure that both the points would be very much clear to you. Now friends, let's move on to the last point. We are in section 17, subsection 2, clause 8, fringe benefits as may be prescribed. In that we have the prescribed list of 8 points, of which we have already completed 7 points. Now we move on to the last point. and that is transfer of movable asset by employer to employee, or we can say sale of movable asset by employer to employee. Employer is owning some movable asset. That movable asset is used by the employer in his business for few years. Thereafter, that movable asset is given to employee. Either it is given free of cost or it is given at some nominal price. Say for example, Manoj was working as a vice president of Reliance Industries, and Reliance Industries had one Mercedes car which was given to employees for using it. And after 3 years, that Mercedes car was sold by Reliance Industries to Manoj only at a cost of 8 lakh rupees. That Mercedes car Reliance had bought for say 40 lakhs. They used it in their business for 3 years. After using that car for 3 years, they have sold this car to employee Mr. Manoj only at 8 lakh rupees. So we need to find out whether Manoj has got some advantage or not, whether Manoj has got some benefit or not. If he has got some benefit, that amount of benefit should be quantified and it should be added to income. So in this case, for ascertaining the benefit, for ascertaining the perquisite value, what we are going to do now? We are going to make a working note. In your 11th standard or 12th standard, you might have come across the chapter of depreciation. Na? There might be a depreciation chapter either in 11th standard or somewhere in 12th standard. You know that whenever the asset is sold, na, you make a separate working note for the purpose of calculation of profit or loss on sale of asset. You make a separate working note for the purpose of ascertaining profit or loss on sale of asset. And in that working note, you pick up the original costs of an asset. From that original cost, you go on deducting the depreciation right from the first year in which the asset was acquired, till the year of sale. During the year of sale also, you calculate the depreciation from the beginning of the year up to the date of sale. You deduct that depreciation to arrive at the amount of WDV. Thereafter, that WDV is compared with the selling price. If the selling price is more than WDV, then you say that there is a profit on sale of asset. Whereas, on the other hand, if the selling price is less, WDV is more, then you will say that there is a loss on sale of asset. There is a loss on sale of asset. Do you recollect such kind of working note? Or did you prepare such working notes? Yes. So similar working note we have to prepare here. Here also we have to make similar working note. Because here also there is a sale of asset. The asset belonging to employer is sold to employee. So it is as good as asset is sold by employer. So we have to make a working note similar to the working note which you used to make for profit or loss on sale of asset. Similar working note we have to make, but slightly 2-3 points are different as compared to what you used to do in accounts. So we are moving on to this transfer of movable asset, also called as sale of movable asset by the employer to the employee. Whenever the movable asset is sold, you have to bifurcate into 3 categories. Is it computer or other electronic items? Then you put into first category. Computer and other electronic items you put into first category. And mind you, when we use the word electronic items, we are not using the word electronic items in general terminology. Or we are not using the word electronic items in layman's language. When we talk about electronic item, television, refrigerator, washing machine, oven, everything is considered as electronic item only. But here, by the word electronic item, we mean to say anything which is related to computer. In other words, computer and computer peripherals. Computer and computer peripherals. Like for example, printer, or for example, UPS system. If there is a power fluctuation, then it should not affect the computer, it should not affect the motherboard. So whatever machine you attach to the computer, That is also a computer peripheral. So when we talk about the word, when we use the word electronic item, we mean to say something related to computer. Something related to computer. So here just below the table I have written electronic item will include number one computer, number two digital diaries. Now digital diaries do not exist in this world. That product is scrapped. Printers, other data storage and handling devices. Other data storage and handling devices means you can say external hard disk. External hard disk is a computer peripheral. So computer and electronic items will include computer and something related to computer. Second category is motor car. And third category is any other asset. Third category is any other asset. Now, for example, employer has sold television, refrigerator, washing machine, oven, furniture, etc. to employee. Then what? Then we'll move on to which point, which category, first, second, or third? Definitely we'll move on to third category. We'll move on to third category. Have you understood this? So, which asset employer has sold to employee now? Based on that, first of all, you have to identify it belongs to which category. We have three categories, category 1, 2 and 3. Category 1 will include computer and items related to computer. Category 2 will include motor car and category 3 will include all other assets which are neither covered by category 1 nor by category 2. Now let's go through the format for calculation of perquisite value. You start with original cost, whatever is the original cost, similar to what you used to do in the working of calculation of profit or loss on sale of asset. Now, same to same. You take the original cost, from that you deduct depreciation. The moment you deduct depreciation, you would arrive at the amount of WDV. You would arrive at the amount of WDV. So you take the original cost, from that you deduct depreciation, and then you arrive at the amount of WDV. But while calculating depreciation, three things are required to be kept in mind. Three things are required to be kept in mind. Number one, depreciation is required to be calculated only for a completed year. Only for a completed year. In other words, part of the year should be ignored. Part of the year should be ignored. For example, say for example, date of purchase of asset by employer. Date of purchase asset by employer is say 1st April 2016 and date of transfer of asset to employee is say 1st October 2020. Then this period you have to calculate. This period you have to calculate in number of years, months and days. So we have financial year 16-17, correct? Then we have financial year 17-18. Then we have financial year 18-19. Then we have financial year 19-20. So it is 4 years. Then from 1st April to 1st October. So it is 4 years, 6 months, 1 day. 4 years, 6 months, 1 day. Have you understood this? You have to just calculate the period in number of years, months and days. Thereafter, you ignore the number of months and days, irrespective of whether it is 6 months or 9 months or 11 months, whatever it is. Part of the year should be completely ignored. You have to take only the completed years. So in our example, completed year is 4 years. 4 years you have to take, that's all. So you calculate depreciation for how many years in our example? 4 years. You calculate depreciation for each completed year. This is first point. Second point, what is the rate of depreciation? In case of computer and other electronic items related to computer, 50% per annum is the rate of depreciation. In case of motor car, 20% per annum is the rate of depreciation. In case of other assets, 10% per annum is the rate of depreciation. So this is second point, rate of depreciation. And now we move on to the third point. Depreciation should be calculated by which method? Depreciation should be calculated by applying which method? In case of computer and electronic items, you should apply reducing balance method, also called as WDB method. Motor car also you should apply reducing balance method, also called as WDB method. Other assets you should apply straight line method. Other assets you should apply straight line method. So for calculating depreciation, 3 points are required to be kept in mind. Number one, you have to calculate depreciation only for completed years. You have to calculate depreciation only for completed years. This is point one. Point number two, you have to calculate depreciation as per the prescribed rate. For computer 50%, motor car 20%, other assets 10%. Number three, you have to follow a particular method for calculating depreciation. For computer, electronic items and motor car, you have to follow reducing balance method. For other assets, you have to follow straight line method. So you calculate depreciation keeping in mind these three important points. Once you have calculated depreciation, deduct the amount of depreciation from the original cost. Once you deduct the amount of depreciation, you would arrive at written down value. Now, I will ask you a very simple question. Say, for example, you are an employee. You have received a movable asset from you. You have received a movable asset from your employer. That movable asset was having a WDB of 1 lakh. Movable asset was having a WDB return on value of 1 lakh, and that asset is given to you only at 20,000 rupees. So what is your benefit here? Asset having a WDB of 1 lakh is sold by employer to you at 20,000. What is your benefit? 80,000 is your benefit. So this 80,000 should be added to your salary, considering it as perquisites. Another possibility is asset having a return on value of 1 lakh is sold by employer to you at 1 lakh 20. So are you having any advantage or you are having disadvantage? Asset worth 1 lakh is sold to you at 120. Your employer has fooled you. He has made your April Fool. So are you having any advantage or disadvantage? Disadvantage. No benefit is received. In fact, employee has bought the asset at a higher price. So in that case, perquisite will be 0. Perquisite value will be 0. Is that very, very clear? Yes. Now before I move on to a practical question, 2 more important points in this connection. I'll ask you one question. Such kind of question examiner can ask you in the examination. In a very big question, he will put such kind of adjustment. Listen to me very carefully. Before giving the answer, listen to the question, think about it, and then give the answer. Please don't jump to the conclusions. You develop a habit of giving the answers after thinking. Question says, X Limited has given furniture to employee at 10,000 rupees. X Limited has given furniture to employee at 10,000 rupees. This furniture was purchased by X Limited for 1 lakh rupees and it is used by them for 12 years. What is the perquisite value? Yes, have you understood the question? X Limited has given furniture to employee at 10,000 rupees. This furniture was acquired by the X Limited at a cost of 1 lakh and was used by them for 12 years. So perquisite value should be 0 because that furniture will fall into other category, any other asset. There you have to take depreciation at 10%, then to straight line method. So if you deduct depreciation for 10 years, your balance value will be zero only. It will be zero only. In that case, if employer is recovering something from you, you are at a disadvantageous position. So in that case, per quit value should be zero. Now let's move on to last 2 points here. Number one, what do you mean by electronic items? What do you mean by electronic items? Electronic items will include computer, digital diaries, printer, other data storage and handling devices. All these are related to computer only. But washing machine, microwave, oven, mixture, hot plate, other household utensils like refrigerator, washing, television, all these things, they are not considered as electronic items. They will fall into third category, that is any other asset. They will fall into third category, that is any other asset. Now I am on to the extremely last point. You have DMart here, DMart or Big Bazaar. In Chennai, do you have Big Bazaar, DMart? Yes. Now, Big Bazaar is a Kishore Biyani group. Big Bazaar is a Kishore Biyani group. Future retail. In Big Bazaar, they are issuing EDC card to an employee. EDC card is similar to an ATM card, which is made by Big Bazaar, and that card is given to their own employees. This EDC card is called as employee discount card. This card is called as employee discount card. It is similar to ATM. There will be a Big Bazaar logo and will be written employee discount card. Name of the employee will also be written on that. So every employee of Big Bazaar, if he wants to purchase anything from Big Bazaar, throughout the year, he will have 10% discount on MRP. Throughout the year. If there is some festival offer, then this special offer of 10% discount will not be applicable. Otherwise, throughout the year, whenever he wants to purchase anything from Big Bazaar, he will enjoy 10% discount. So what employer is doing? Whatever goods employer is manufacturing or whatever goods employer is trading in, those same goods are sold to employee at a lower price. At a lower price. This is also a benefit given by employer to employee. This is also an advantage offered by employer to employee. But in this case, nothing will become taxable. In this case, nothing will become taxable. So note says goods manufactured by employer, sold by employer to employee at a concessional rate. Nothing will become taxable. Is that very clear? Yes or no? Now let's move on to question number 11. Question number 11. Right now it is 8:20 in my watch. I will read the question and I will give you maximum 3 minutes time to give the answer. I think instead of me, only you should read the question. I should not also read the question. Before that, I want to rectify one error in the question. Question says compute the taxable value of per quid in respect of following benefits availed by Mr. Adam from his employer. And when you move on to point number A, B and C, instead of Adam, the name of employee is changed to R. So in the first line, you cancel the name Adam and you replace it by R. Now you read the question and you give me the perquisite value for point A, point B, point C. I am giving you sharp 3 minutes time. Right now it is 8:21 in my watch. I can give you 3 minutes time, that is up to 8:24. Calculate, do the calculation and give me the perquisite value for point A, point B and point C separately. Yes, point A. Soumya has got the answer for point A. According to her, answer is 8,000 for point A. Yes? Anyone has got the answer for point A? Till now I have got two answers. One is 8,000, the other one is 4,000. Oh, Sarvana says 17,500. So we have three answers till now for point number A. I am sure every one of you are giving answer for point A only. So there are three answers till now: 8,000, 4,000 and 17,500. But most of the people are giving the answer as 4,000. Three of them are giving the same answer, which is 4,000. Yes? Anyone has got any other answer other than these three? No, I don't think so. So, let's move on to this question number 11.A. Read it very carefully. What it says: employees allowed to use the video camera belonging to the company. The company had purchased this camera for 40,000 on 1st September 16. They are talking about 2016. This camera was sold to him on 1st October 20 for 20,000. Now my question to you is, this is which perquisite? Is it use of movable asset? Is it transfer of movable asset? Or is it a combination of both? Yes, point number A is which perquisite? Is it use of movable asset, or is it a transfer of movable asset, or is it a combination of both? So definitely it is a combination of both. You refer to the first line, it says he is allowed to use the video camera belonging to the company. And that same video camera is sold to him on 1st October. See, once the video camera is sold to employee, definitely he is the owner. Now he will use that camera for his entire life only. Life of the camera. So we can say that there is an advantage only when you are having a chance to use someone else's asset. So my question to you is, in this case, employee was using video camera of employer for how many months in a year? For how many months in a year? In a year means we are talking about the previous year 2021. In the previous year 2021, employee was using video camera belonging to the company for how many months? Now 1st October, this camera is sold to him na? Means up to 30th September, that camera belonged to the company and it was used by the employee. Yes or no? Are you all understanding? Now you tell me, use of video camera falls into which category? In point number 7, use of video camera, first category here, use of mobile asset is computer, laptop, free telephone facility. Second category is motor car. Third category is other asset. So my video camera will fall into which category? Other asset. This is leased. This is owned because the cost is given to you. So what is the cost? 40,000 rupees. On that you apply depreciation at what rate? 10% per annum. 10% you have to apply per annum. But he has used camera only for 6 months. So you should apply 10%, then you should multiply it by 6 upon 12. So how do you get the value for use of video camera? 40,000 into 10 upon 100, that is 10%. 40,000 into 10 upon 100 is 4,000 into 6 upon 12. This will give you 2,000 rupees. This will give you 2,000 rupees. So 2,000 is perquisite value for use of movable asset. Have you understood this? Yes? Tell me. Have you understood this much? Yes or no? Perquisite value for use of movable asset? Yes. Now this same camera is also sold to him. When it is sold? On 1st October 2020. When it was acquired by the company? On 1st September 2016. And what price it was acquired at? What cost it was acquired? This camera was acquired on 1st September 2016 at a cost of 40,000. Now you tell me transfer of movable asset. This camera will belong to which category? Any other asset. So you have to calculate depreciation at 10% by SLM method. Now first of all you calculate the period on which date this camera was sold. On which date this camera was sold to employee. This was acquired by the company on 1st September at a cost of 40,000. This was sold to employee on 1st October 20. So you give me what is the time period from 1st September 2016 to 1st October 2020. What is the time period? In number of years, months and days. But you know that months and days they are required to be ignored. So you just consider number of years, that's all. If a particular year starts on 1st January, it will end on 31st December. If the year starts on 1st April, it will end on 31st of March. If the year starts on 1st September, when it will end? If the year starts on 1st September, when it will end? It will end on 31st August. Yes or no? It will end on 31st August. So which one would be the 31st August prior to 1st October 20? It would be 31st August 2020. It would be 31st August 2020. So now you calculate the period in number of years from this 1st September 16 to 31st August 20. 1 year would be up to 31st August 17. 31st August 17, 31st August 18, 31st August 19 and 31st August 20. So it is 4 years. Yes or no? Which method of depreciation? SLM. What rate of depreciation? 10%. So what would be the amount of depreciation for 4 years? 4 years depreciation would be how much? 1 year depreciation would be 10% of 40,000, 4,000 na? Multiply by 4 years. So how much depreciation? 16,000. So what is the WDV? 24,000. This asset is sold to employee at what price? 2,000. Sorry, 20,000. Yes or no? It is sold to employee at 20 na? So what is the difference? Amount recovered from employee is 20, whereas the WDV of asset was 24. So difference is 4,000. This is taxable value of perquisite for transfer of movable asset. So use of movable asset, the perquisite value was how much? 2,000. Transfer of movable asset 4,000. 4,000 transfer of movable asset. First of all, tell me, have you understood? The correct answer is 6,000 rupees. None of you had given me answer as 6,000. But now have you understood this? Soumya says, but sir, if asset is sold, we have to take only completed years, na? Soumya, we have taken completed years only. We have taken completed years only. See, after 31st August 20 also, there is a month of September, na? So if we count the period, actual period is 4 years. Actual period is you give me what is the actual period? 4 years, 1 month and 1 day. Soumya, The actual period is 4 months, 1 year, 1 day. We are ignoring this 1 month, 1 day, and we are taking into account only 4 years. Are you understanding? Yes or no? No, no, not financial year. Not the financial year. You have to take the year starting from the date of purchase. Na? You have to take the year starting from the date of purchase, not the financial year. I wrote clearly, na, date of purchase of asset by employer, date of purchase. Date of purchase of asset by employer. From this date to the date of transfer. You don't have to look at the financial year. Vidyashri says, I have not understood the use of mobile asset. Vidyashri, can you tell me use of video camera falls into which category here? It falls into which category? First, second, or third? Yes, are you third category? Is this camera is owned or it is taken on lease? It is a owned camera or a hired camera? Owned camera. What is the cost of camera? 40,000. You are calculating income for which year? You are calculating income for financial year 2021. During this financial year 2021, this camera is sold to employee on which date? 1st October 20, right? So that camera was used by employee for how many months? For how many months camera belonged to employer and was used by employee? 6 months. That is April to September. Yes or no? So you calculate depreciation 10% per annum based on actual cost. Your actual cost is 40,000. 10% of that is 4,000. But that is 10% per annum. You have to calculate the procured value only for 6 months. So 4,000 to 6 upon 12 will be 2,000. Yes? Have you understood now? So with this point number A is over. You should mark this point number A as very, very important point. All of you have done the mistake at this point. Shruti is asking me, sir, Shruti is asking me, sir, so in 16-17 taxable value of procured will be 2,000 and 2021 will be 4,000, right? Shruti, we are calculating income for which year? We are calculating income for 2021. Why should we think about 16-17? Read the question, what it says. Employees allowed to use the camera belonging to the company. We are calculating income for 2021. So this all statements are given for 2021. So you can use the camera of the company during the financial year 2021. Why that information of 1st September 16 is given to you now? So that you can calculate the period. You can calculate for valuation of per quid of transfer of mobile asset now. You are required to deduct the depreciation for each completed year now. If you don't have the date of purchase asset, how will you calculate the period? For that, the information of past year is given to you. But we are calculating income for the previous year 2021. So use of mobile asset perquisite should be taxed only for this year. If at all asset was given to employee in the year 16-17 also, then that would have been taxed while computing income of 16-17. Right now, we are not calculating income of 16-17. We are calculating income of 2021. Shruti madam, are you understanding? So, this 2000 use of movable asset now, that is also a perquisite value of current year only. For which period? April 2020 to September 2020. Correct? So this 2000 is the perquisite value for use of movable asset in the current year, April 20 to September 20. And this 4000 is the perquisite value for current year only, but that is not for use, that is for transfer. Is that very, very clear? See, at the beginning only I told you that this question is slightly tricky. Now, point number 2 and 3 is not at all difficult. Point number 2 and 3, few of you might have already calculated. Yes, point number 2 says what? Company had purchased a car on 16 July 16 for 5 lakhs. No, point number B, 1 lakh is not the answer. Company had purchased a car on 16 July 16 for 5 lakh. This car was sold to Mr. R on 14 July 20 for 1 lakh 20. Car was not being used by R. So here we don't have that use of mobile asset perquisite. We have only transfer of mobile asset perquisite. Are you understanding this? Yes or no? So let's calculate at what price the car was acquired. 5 lakhs. This is the actual cost of car. And the car was acquired on which date? 16th July 16. 16th July 16. Now, can you tell me from 16 July 16, 1 year will get completed on which date? We have to deduct depreciation at what rate? We have to deduct depreciation at the rate of 20%. Which method? WDV method. So you give me depreciation for at the rate of 20% of 5 lakhs. That be 1 lakh rupees. Yes or no? Can you tell me this is depreciation for which period? From 16 July 16 to 15 July 17. Yes or no? So the WDV will be 4 lakhs. Once again, you have to deduct depreciation at the rate of 20%, WDV method. 20% of 4 lakh will be 80,000 rupees. This is depreciation for which period? From 16 July 17 to 15 July 18. WD will be how much? 3 lakh 20. Once again, you deduct depreciation at the rate of 20%. That will be 64,000. This is depreciation for which period? 16 July 18 to 15 July 19. So balance value is 2 lakh 56. Should you deduct depreciation for one more year? Should you deduct depreciation for one more year? On which date the asset is transferred? Asset is transferred on 14th July 20. Asset is transferred on 14th July 20. But one more year, if you take one more year, that date would be 15th July. So I can say that in a span of 1 year, 1 day is less. So we should not deduct depreciation because we are taking depreciation only for completed years. We are taking depreciation only for completed years. So we should ignore that. Fourth year, 11 months, 29 days should be ignored. Is that very clear? This car is sold to employee at what price? 1,20,000. So car having a written down value is sold to employee at 120. So amount recovered from employee is 1,20,000. So car having a WDV of 2,56,000 is acquired by employee at 120. What is the benefit received by employee? 1,36,000. So this is taxable value of purchase. Is that very, very clear? Yes. So along with point A, point B is also over. Point C is very simple. Company pays a telephone bill of 24,000 for telephone installed at the residence of our telephone facility. Use of telephone is totally exempt from tax. No tax at all. So question number 11 is over. Question number 11 is over. Now let us move on at the beginning of the chapter. At the beginning of the chapter, I have given you the list of sections. Out of that, 17 to clause 1 rent-free accommodation is over. Soumya says if car is sold on 15 July 20, if car is sold on 15 July 20, should we take one more year? Yes, yes. If the car would have been sold on 15 July 20, then we would have taken one more year. That question clearly indicates that the employee was not having any knowledge. He was not a chartered accountant. If he would have been a chartered accountant, he would have purchased the car 2 days later. In that case, one more year's depreciation would have been deducted. In that case, taxable value of purchase would have been lower. Yes, are you understanding? So in the question is transferred on 14th, so year is not completed. So we are not taken depreciation. But if it is transferred on 15th, year will get completed. Dikshito, kindly keep your mic off. All others, kindly put your mic on and keep it off. Whatever secret information you are sharing in your house is being made public. Soumya madam, is that clear? Shall I proceed? Yes. So I am on first page of the chapter, that is page number 36. Section 17 to clause 1 is over. 17 to clause 2 is also over. 17 to clause 3. This discussion is pending. 17 to clause 3. 17 to clause 4 is over. But along with 17 to clause 3, we will also discuss 17 to clause 4 once again. 17 to clause 5, 6, 7, 7a, clause 8 is also over. In clause 8, we have completed 8 points. We have completed 8 points. Point number 9 says any other benefit or amenity, service, right or privilege provided by employer. See, point number 9 is a residuary point. Point number 9 is a residuary point. In section 17, subsection 2, clause 8, point number 9 is a residuary point. That residuary point, if employer is providing some facility or some benefit or some amenity which is not specifically covered by any other point, employer is providing some benefit, facility, etc., that is not covered by other points. In that case, that facility should be taken into residual point, point number 9. And in point number 9, you apply the general rule. What is general rule? Amount incurred by employer minus amount recovered from employee. Amount incurred by employer minus amount recovered from employee. Yes, is that very, very clear? Yes or no? Now, so what is left now? In this perquisite, what is left? Only one section is left, section 17, subsection 2, clause 3. Section 17, subsection 2, clause 3, only one section is left. What is that now? Perquisite provided to specified employee. Perquisite provided to specified employee. I don't want to explain you this right now, but I want to just tell you that employees are divided into two categories. Special employees working at a higher designation and other employees. Special employees, important employees, they are called as specified employees. Others will be called as non-specified employees. So for the purpose of valuation of perquisite, we have divided the employees into two categories, specified employees and non-specified employees. When I use the word all employees, what do you mean by that? Or what do you understand by that? When I use the word all employees, what do you understand? I am talking about a specified employee or I am talking about all employees? Sorry, I am talking about specified, I am talking about non-specified, or I am talking about both. When I use the word all employees, definitely I am talking about specified as well as non-specified, both. So, are you understanding what I am trying to tell you? For the purpose of perquisite, employees are divided into two categories, specified employees, non-specified employees. When I use the word all employees, you should understand it as specified as well as non-specified both. So I want to tell you that if you refer to this column, taxable for whom? This perquisite is taxable for whom? Against every section I have written all employees. Against every section I have written all employees. See, all employees. So whatever perquisites we have discussed till now, they are taxable for all employees, specified as well as non-specified. But we have only one perquisite which is covered by 17(2) clause 3, which is taxable only for specified employee, only for specified employee. Yes, have you understood this much? Now, before we move on to that perquisite, 17(2) clause 3, before we move on to 17(2) clause 3, I'll help you to remember all the perquisites. Perquisite, we have section 17, subsection 2, clause 1. 17(2) clause 2. 17, subsection 2, clause 3. 17, subsection 2, clause 4. 17(2) 5. 17(2) 6. 17(2) 7. And the last one, 17 to 8. Can you tell me what is point number 1? Rent-free accommodation. Rent-free accommodation. Point number 2 is concessional accommodation. Concessional accommodation. Point number 3 is perquisites provided to specified employee. Perquisites provided to specified employee. Point number 4, obligation of employee met by employer. Point number 5, life insurance premium of employee paid or payable by employer. Point number 6, shares or securities. Shares or securities issued by employer, allotted by employer to employee either free of cost or at concessional rate. Point number 7, see, budget 20 I told you now. 17 to clause 7 is amended and new clause is also inserted. 17 to clause 7a. So I have not made a shortcut to remember the budget amendment. I have the older dialogue for you. You can remember all this from section 17 to clause 1 to 8. Keeping aside the budget amendment that you have to remember on your own. 17 to clause 7 up to last year what it was? Employer's contribution to approved superannuation fund. Up to last year it was only approved superannuation fund. Now it is approved superannuation fund, recognized provident fund and pension fund. And the last one is fringe benefit as may be prescribed. Fringe benefit as may be prescribed. Now out of these 8 points, you tell me which is the only one perquisite which is taxable only in case of specified employee. It is 17 to clause 3. Keeping aside 17 to clause 3, rest all are taxable in case of specified as well as non-specified. Rest all are taxable in case of all employees. Yes or no? Are you understanding? Yes. Now for example, I give 1 lakh rupees to each one of you. I am giving, it is just an example. I don't have that much money also. I am giving 1 lakh rupees to each one of you, and I am telling that this money you should invest in shares to ensure that this gets appreciated. So the question is, you would invest in shares of which company? Which group you will invest in? Will you invest money in the shares of Reliance Group, Reliance Mukesh Ambani Group, Reliance Anil Ambani Group? Will you invest in Tata Group? Will you invest in Birla Group? Will you invest in Vadhwa Group? Will you invest in Adani Group? Which group you will invest money in? So I personally say that you should invest money in Reliance only. Highly profit making company, looking for opportunities, having more than adequate funds, can extract profit out of any situation. So shares of Reliance company is best for you. If you want to have good return on your investment, then there cannot be a better company than Reliance. So I am saying that I am giving you a dialogue to remember. Reliance Company Limited. Reliance Company Limited. Shares are first class. Reliance Company Limited shares are first class. That is what you have to remember. R is what? Rent-free accommodation. C is concessional accommodation. O is obligation of employee met by employer. L is life insurance premium. S is shares the securities issued by employer to employee free of cost or at concessional rate. Next is employer's contribution to approved superannuation fund, recognized provident fund, pension scheme. And last one is fringe benefit as may be prescribed. So this is clause 1. This is clause 2. Clause 3 now we have removed because it is taxable only in case of specified, now that we have removed. This is clause 4, 5, 6, 7 and 8. So from 17 to clause 1 to clause 8, you can remember this perquisition as in the order, keeping aside 17 to clause 3 and keeping aside 17 to clause 7a. Actually 17 to clause 7a is related to clause 7 only. Whatever is the taxable component in 7, of that proportionate income will also become taxable. So this we have done. Similarly, I have one more dialogue for 17 to clause 8. 17 to clause 8 na, fringe benefit. We discussed how many points in fringe benefit? Do you recollect? We have discussed 8 points. 8 points. Point 1 is interest-free loan, concessional loan. 9 was residuary. 9 was not a specific point, it was a residuary. So just remember 8 points. First was interest-free loan, concessional loan. Second was traveling, accommodation, touring, other expenses. Third was free meal and refreshment. Fourth was gift. Fifth was credit card facility. Sixth was club facility. Seventh was use of movable asset. And eighth was transfer of mobile asset. Transfer of mobile asset. All those people, all those who are interested in cricket might be knowing that Indian cricket team management was looking for a good coach. I am talking about a situation prior to 2 years, just before 2 years. Anil Kumble was the coach for Indian cricket team. But somehow there was a ego clash between Anil Kumble and Virat Kohli. So they kept aside Anil Kumble and they were looking for a coach for the Indian cricket team. And right now, Ravi Shastri is the coach for Indian cricket team. His job is to just adjust with Virat Kohli, that's all. Actually, if you want a good coach, first of all, he should be a very good player. He should have a very long career. Because the job of a coach is to get into the mind of the opposition team and defeat them. Without getting into the ground, he will defeat the opposition. For that, you should have a coach who is having the knowledge with respect to which player, what is the weakness, what is the strength area, etc. And such kind of knowledge you can have only if you have played cricket for a very long span of time. You know each and every international team, you know all the players. So best coach for the Indian cricket team would have been Sachin Tendulkar. So I say that if you would have appointed Tendulkar as coach, then Indian cricket team would have been always champions. Right now it is also a champion only, but if you appoint Tendulkar, then it will always remain champion. So you have to remember the dialogue. Indian team first class. Indian team first class. Guaranteed cricket champions. Guaranteed cricket champions under Tendulkar. Indian team first class. Guaranteed cricket champions under Tendulkar. So I is interest free loan, concessional loan. T is traveling, accommodation, touring, other expenses. F is free meal refreshment. G is gift. C is credit card facility. Next C is club facility. Second last is use of mobile asset, and the last one is transfer of mobile asset. So all these perquisites which we have discussed, you can remember in that particular order itself. Now today's session we are having up to what time? 10:30, right? Expansion once more. Indian team first class. Indian team first class. Guaranteed cricket champions. Guaranteed cricket champions. Under Tendulkar. Indian team first class. Guaranteed cricket champions under Tendulkar. So, we'll now move on to 17 to clause 3. We'll now move on to section 17, subsection 2, clause 3. And whatever we discuss in section 17, subsection 2, clause 3 now, will always be compared with section 17 to clause 4. So, we'll have a comparative discussion of two sections, 17 to clause 3, 17 to clause 4. We are on page number page number 58 of your book. We are on page number 58 of your book. See, 17 to clause 3 says what? Value of any benefit or amenity granted or provided either free of cost or at concessional rate in case of specified employee. So 17 to clause 3 is applicable only when the facility, benefit, amenity is provided to specified employee. In other words, in case of non-specified employees, those facility would not be taxable. If the facility is covered by 17 to clause 3, if it is provided to specified employee, it is taxable. If it is provided to non-specified employee, it is not taxable. See, we will compare these two sections. Section 17, subsection 2, clause 3 versus, don't write anything, everything is written in your book. Just focus here, try to understand. 17 to clause 4. If the perquisite is covered by 17 to clause 3, then if the employee is a specified employee, that perquisite is taxable. On the other hand, if the employee is non-specified employee, then that perquisite is not taxable. Then that perquisite is not taxable. On the other hand, if you talk about 17 to clause 4, this perquisite is taxable in case of all employees. So if employee is a specified employee, this perquisite is taxable. On the other hand, if employee is a non-specified employee, then also this perquisite is taxable. Have you understood how the taxability would arise in 17 to clause 3 and 4? 17 to clause 4 is taxable in case of all employees, irrespective of whether the employee is a specified employee or non-specified employee. But 17 to clause 3 is taxable only and only in case of specified employee. In other words, if the employee is a non-specified employee, then the perquisites which are covered by 17 to clause 3 will not be taxable to him. Now, basically what is the difference between 17 to clause 3 and 4? Which all perquisites will be covered in 17 to clause 3 and which all will be covered in 17 to clause 4? See, 17 to clause 4, basically it is monetary perquisite. It is monetary perquisite. Whereas 17 to clause 3 is non-monetary perquisite. 17 to clause 3 is non-monetary perquisite. And when we started the concept of perquisite, I had explained the difference between allowance, perquisite, which perquisite? monetary perquisite as well as non-monetary perquisite. So I had explained you the distinction between allowance, monetary perquisite and non-monetary perquisite. Same benefit can be given to the employee either through allowance or through monetary perquisite or through non-monetary perquisite. Say for example, in my organization, I want to ensure that all the employees, their children's education cost I am paying. So I have an intention to bear the children's education cost of my employee's child. So number one possibility, I can give them fixed allowance. I can give them fixed allowance. Number two possibility, I can create a school. I can start a school, I can appoint the teachers, and I can ask my employees to send their children to that particular school. Or number three possibility is, I don't have my own school. So I've asked my employees, you take the admission for your children in the school which is nearby your house, and whatever cost you incur, you just tell me, I'll reimburse or I'll pay directly to the school. These are three different approaches by which I can provide this benefit to my employees. Here we are talking about not the allowance but only about the perquisite. So if it is a non-monetary perquisite, it is covered by 17 to clause 3. If it is a monetary perquisite, it is covered by 17 to clause 4. So now question arises, what do you mean by specified employee? You know that if the perquisite is covered by 17 to clause 3, it is taxable only in case of specified employee. If it is covered by 17 to clause 4, it is a monetary perquisite. It is taxable in case of specified employee as well as non-specified employee. But the point is, what do you mean by specified employee? When can we say that an employee is a specified employee? So, we have three different criteria to identify a specified employee. We have three different points. We have three different conditions. If employee is satisfying or fulfilling any one of the condition also, then we'll say that he is a specified employee. First point says, employee who is a director of the company. First point says, an employee who is a director of the company. Now this point, CA Institute is having a different opinion, I am having a different opinion. At the beginning of the chapter, if you remember, we started this chapter with section 15, charging section, wherein I explained you employer-employee relationship. While explaining you that employer-employee relationship, I had told you that director can be of two different types, full-time director, part-time director. If the director is a full-time director, then between the company and the director, there is an employer-employee relationship. There is an employer-employee relationship. So amount of remuneration received by director is taxable under income from salaries. On the other hand, if the director is a part-time director, if the director is a part-time director, then between the employer, between the company and the director, employer-employee relationship do not exist. Employer-employee relationship do not exist. Therefore, amount received by that part-time director cannot be taxed under income from salary. It will be taxed either under that business profession or under income from other sources. If question is silent, definitely income from other sources. Part-time director would receive director sitting fees. That director sitting fees is nothing but amount received for attending the board meetings. So at the beginning of the chapter itself, it was very clear that the amount received by part-time director cannot be taxed under income from salary. He is outside the chapter of income from salary. Now here we are trying to understand the definition of specified employee, and here point number 1 says an employee who is a director of the company. So the point is which director is an employee? Full-time director is an employee or part-time director is an employee? There are two parameters. Person should be employee plus person should be director. Person should be an employee also. Person should be a director also. And you know that part-time director is not an employee because there is no employer-employee relationship. So when we use the word specified employee, in that point number 1 it says employee who is a director of the company. Definitely, ideally, it should be only full-time director. It should be only full-time director because only a full-time director is an employee. But CA Institute in module, they are saying that specified employee will cover full-time director as well as part-time director. I totally disagree with that opinion because part-time director is not an employee first of all. And here for becoming a specified employee, person should be an employee, then he should also be a director. Both the parameters are required to be fulfilled now. So this is one of the point wherein I do not agree with what ICI says in the module. But yes, ICI, you have to follow whatever they say, even if it is wrong. So I have told you my opinion so that you don't ask me doubt when you refer to the module now. If you come, I have already told you that from module you should refer only the practical question. Theory you should refer from our notes because it is given in a much simplified manner. But if at all someone goes through the theory from the module or come across such point, they should not have a doubt. That is the reason I have clarified right now only that my opinion is different and what module says is totally different. I don't agree to what they say, but for the purpose of examination, if something is asked, you have to give answer as per the module only because my opinion doesn't have any weightage. I cannot get you marks. My opinion cannot get you marks. What ICI says is final. So point number 1, an employee who is a director of the company is a specified employee. Point number 2, an employee who is having a substantial interest in the company. Substantial interest in the company means that employee is holding 20% or more shares in the company. That employee is holding 20% or more shares in the company. In other words, that person is an employee plus he is a shareholder holding 20% or more shares. So point number 1 was employee who is a director of the company working at a very high position. So definitely he is an important employee. Therefore, we categorize him as specified employee. Point number 2, employee is a shareholder having 20% shares in the company. 20% shares in the company means he can influence the decisions of the company. Therefore, definitely he is also a specified employee. He is also an important employee. Now, point number 1 and 2 now. Point number 1 and 2, you can say that yes, they are. Point number 1 and 2, they are important employee. Yes, we can understand. But point number 3, if I explain you, then you will have a doubt on me, saying that whether sir is telling correct thing or incorrect thing. So I am warning you at the beginning only, saying that point number 3, you will not be in a position to digest, you will not be in a position to accept. Because the point number 3, now they have not amended since last 25-30 years. So as of now, nearly because of point number 3, everyone has become a specified employee. Everyone has become a specified employee. So this point will not be in a position to digest, but you have to accept whatever law is. Point 3 says, employee not covered by point 1 and 2. Employee not covered by point 1 and 2, whose income under the head salary, excluding non-monetary benefits, exceeds 50,000 rupees. Exceeds how much? 50,000 rupees. That too, not per month. They are talking about per annum amount. They are talking about per annum amount. If your salary excluding non-monetary salary, your salary excluding non-monetary salary exceeds 50,000 rupees, now you are a specified employee. Now, nowadays, even the security guard of the company, watchman, his yearly salary will also be more than 50,000 rupees. So he will also be considered as important employee for the organization. He will also be considered as specified employee. Definitely you will not be in a position to accept this, but the fact is, this is the law. The amount of 50,000 now, this was made long time back, maybe 25, 30, 35 years back. From that time onwards, government has not taken the effort to revise this amount. In my opinion, this amount should be at least 18 to 20 lakh rupees. But whatever it is, you have to accept. So listen to me very carefully. What you have to do now, you have to calculate salary. In salary, you know that we take which all things we take in salary. Do you recollect the format for computation of salary? Page number 62. See, this is the format for computation of salary. This is the format for computation of salary. Now, our job right now is to find out that 50,000 salary. If your yearly salary is more than 50,000, you will be considered as specified employee. But that salary word includes what? They are talking about what? So for calculating that salary, you should take what all things you have to take. You have to take basic salary. You have to take number one, basic salary. Number two, you have to take allowances. Number three, in perquisites, in perquisites, you have monetary perquisites and you have non-monetary perquisites. Monetary perquisites you should take and non-monetary perquisites you should ignore. Profits in lieu of salary, you should take the entire amount. Then you add up, you get the amount of gross salary. From that you deduct standard deduction under section 16 clause A, entertainment allowance under section 16 clause 2, profession tax under section 16 clause 3. Thereafter, whatever amount you get now, that is nothing but the salary. I can use the word monetary salary. Monetary salary. Why now? Because we are removing only one thing from here. What is that? Non-monetary perquisite. We are removing non-monetary perquisite. Otherwise, the entire calculation of income from salary computation statement remains the same. We are just removing non-monetary perquisite. So this is the way in which you have to calculate salary, and thereafter if this final amount of salary is more than how much? More than 50,000 rupees, more than 50,000 per annum, then you will be considered as a specified employee. Then you will be considered as a specified employee. So it says employee not called above, you take salary excluding non-monetary benefits. If that exceeds 50,000, then employee will be considered as specified employee. While computing 50,000, following things are required to be deducted. All non-monetary benefits should be deducted or should be excluded. All monetary benefits which are exempt in section 10. All monetary benefits which are exempt in section 10 means section 10 clause 10 gratuity, clause 10A pension, 10AA leave salary, 1010B retrenchment, 1010C VRS, 1014 clause 1, 1014 clause 2, 1013A, all these are allowances. All these things now which are exempt should not be taken into account. Anyway, while calculating income from salary, all those things which are exempt we don't take into account now. So here also we should not take into account. From that you deduct deductions under section 16 clause 2, clause 3. Here you write clause 1A also. Here by mistake I have not written clause 1A. You also write clause 1A. Under section 16 clause 1A. What is that clause 1A? Standard deduction. Clause 1 is standard deduction. So you have to deduct standard deduction. You have to deduct entertainment allowance deduction. You have to also deduct profession tax. So you deduct all these amounts. Thereafter, whatever salary is arrived, that is called as monetary salary. If that monetary salary is how much? More than 50,000, then we can call that employee as a specified employee. And because of this point number 3 now, every employee in this world is a specified employee because every person is earning more than 50,000 per annum. Is that very, very clear? (17) to clause 4, it is already explained to you. Any sum of money paid by employer in respect of an obligation on behalf of the employee. Whenever your employer is paying your personal expense is paid by your employer. Your personal expense is paid by your employer, or it is paid by you and later on it is reimbursed by employer. In both these cases, that amount will become taxable to you as per section 17, subsection 2, clause number 4. Now here I have given you the comparison between 17 to clause 3 and clause 4. Here I have given you the comparison that I explained you by writing. The same thing is written here. See, 17 to clause 3, perquisites taxable only in case of specified employee. Taxable only in case of specified employee. 17 to clause 4, perquisites taxable in case of all employees. All employees. All employees means specified employee as well as non-specified employee. Specified employee as well as non-specified. And here 17 to clause 3 is a non-monetary perquisite, whereas 17 to clause 4 is a monetary perquisite. We can refer the example. For example, salary of your domestic servant is paid by employer or it is paid by you and later on it is reimbursed by employer. Second point is medical expenses of employee. Either it is paid by employer or it is paid by employee and then it is reimbursed by employer. So whenever the word paid is appearing or whenever the word reimbursement is appearing, it is covered by 17 to clause 4. It is a monetary benefit. It is taxable in case of specified as well as non-specified. On the left hand side, same facility we have given you example and that is in the nature of non-monetary. Domestic servant facility is provided by employer. Facility is provided by employer. So instead of giving you money, instead of paying domestic servants a salary or you paying and then reimbursing, employer has provided you a domestic servant itself. He has appointed the domestic servant and he has said to the domestic servant, you will be working for this person. Who will pay salary to him? Definitely employer will pay salary. So you have not got money directly or indirectly. What you have got is facility. So this is a non-monetary perquisite covered by 17 to clause 3. Then we have medical facility provided by employer. Medical facility provided by employer means, say for example, you have got a medical treatment for some illness in the hospital owned by employer. Then we say it is a non-monetary benefit. Have you clearly understood the difference between a monetary benefit and non-monetary benefit? Yes or no? Yes or no? Now, the 17 to clause 4 will cover those points wherein making the payment was employee's obligation. Making the payment was an employee's obligation, but that payment is made by employer or payment is made by employee, but thereafter it is reimbursed by employer. Thereafter it is reimbursed by employer. Now I'll take one example to make you understand. In fact, you should identify whether it is covered by 17 to clause 4 or whether that perquisite is covered by 17 to clause 3. If it is non-monetary, it is covered by 17 to clause 3. If it is monetary, it is covered by 17 to clause 4. My simple question is, say for example, you are residing in your own house. You are residing in your own house. In your house, you are having electricity connection. You are having an electricity connection. Every month you are going to receive a bill. Payment of that bill is whose obligation? Employee is residing in his own house. He is having an electricity connection. At the end of every month, he would receive the bill. It is whose obligation to pay that bill? Yes. On the bill, whose name will be written? Employee's name will be written. Because that connection is in the name of employee. Na? It is whose obligation to pay money? It is employee's obligation. But if it is paid by employer or it is paid by employee, subsequently it is reimbursed by employer, then we will say what? It is covered by which section? Then we say that it is covered by section 17 subsection 2 clause 4. Obligation of employee met by employer. This will become taxable in case of specified employee as well as non-specified employee. Is that very clear to you? Yes or no? Let me give you one more example. One more example. Say for example, employer has given you accommodation to stay. Employer has provided you a accommodation. That is nothing but a staff quarter. So employer has provided you a accommodation. In that accommodation also there will be a electricity connection. That electricity connection will be in whose name? Will it be in your name? Will you receive the bill at the end of every month? No. That accommodation doesn't belong to you. You do not own the premises. So in that premises, in that accommodation, whatever electricity connection is there, that electricity connection will be in the name of employer. Who would receive the bill? Definitely employer would receive the bill. Who would pay the bill? Definitely employer would pay the bill. But who is enjoying this facility of free electricity? Employee is enjoying this facility. In that case, we say that it is covered by section 17 subsection 2 clause 3. It will become taxable only in case of specified employee because it is in the nature of non-monetary benefit. Have you understood this clearly? Yes or no? Yes. Okay. Now see, in this chapter, what all things are left in this chapter? In this chapter, we are left with 7 points here. You can see there are 7 points. These 7 perquisites are required to be discussed, and besides that, we need to discuss a relief under section 89. Relief under section 89. So basically, 8 points are to be discussed in this chapter. 8 points are required to be discussed. Our target is to complete this chapter today. The biggest perquisite is a motor car facility, which we'll discuss around 45 minutes. We'll have a discussion of 45 minutes on this motor car perquisite. If you ask any of your friends who are appearing for CA intermediate, that out of the entire chapter of income from salary, which perquisite is the most difficult one to remember, they would say you motor car perquisite. But let me tell you that this perquisite is going to become the most simplest one for you after today's evening lecture. Because I will not explain you anything. I will make some rules for you, and based on that rules, you will give me the valuation rules. You will tell me what should be the components taken for the purpose of valuation of perquisite. So today evening we are going to discuss the most important perquisite, that is motor car facility. So please don't skip your lectures today. So perquisite, here we are having a discussion of 17 to clause 4 in conjunction with 17 to clause 3. 3, 4 both are discussed in a combined manner. If it is a monetary perquisite, it will be covered by 4. If it is a non-monetary perquisite, it will be covered by clause 3. If it is clause 3, it will be taxable only to specified. If it is clause 2, if it is clause 4, it will be taxable to specified as well as non-specified. In that we have 7 points. Let's move on to the first point first. That is gas, electricity and water supply connection charges. Gas means we are talking about a cooking gas. Cooking gas is supplied through pipelines, na? So we are talking about a cooking gas. Number 2, we are talking about a electricity bill. And number 3, we are talking about the water charges. If this facility is given to you, will it become taxable to specified, non-specified, or all? It will be covered by which section? First of all, you have to think that this gas, electricity and water supply connection, they are in whose name? Possibility 1, these connections are in the name of employee. When these connections will be in the name of employee, when employee is residing in his own house, these connections would be in the name of employee. So employee would receive gas bill, electricity bill, water charges bill every month. It is whose obligation to pay those bills? It is employee's obligation. But if it is directly paid by employer or it is paid by employee and subsequently reimbursed by employer, then what do we say? In that case, we say that it is covered by which section? 17 to clause 4. 17 to clause 4. If it is covered by 17 to clause 4, it is taxable for specified employee as well as non-specified employee. It is taxable for specified employee as well as non-specified employee. Are you understanding this? Yes or no? Have you understood this left hand side part? Right hand side. Right hand side, we say that these connections are in the name of employer. Left hand side, connections were in the name of employee. Right hand side, we say connections are in the name of employer. When this gas, electricity and water supply connection will be in the name of employer, when he has provided you an accommodation to stay, in that accommodation, gas, electricity, water supply, all connections will be in the name of employer. If the connections are in the name of employer, who is going to receive the bill? Definitely employer. Who is going to pay the bill? Definitely employer. But in this case, employee is just enjoying the benefit. So this will be covered by, it is not employee's obligation to pay. It is employer's obligation because bill is in the name of employer. But employee is just enjoying the facility. In that case, we say that it is covered by 17 to clause 3. It is covered by 17 to clause 3. It is in the nature of non-monetary benefit. So if the employee is a specified employee, then it is taxable in 17 to clause 3. If the employee is a non-specified employee, then it is not taxable. Yes, have you understood this very, very clearly? Till now in this video, I have explained you when it is taxable, when it is not taxable. Now second part is, what is the taxable value of perquisite? But first of all, have you understood the first part? When it is covered by 17 to clause 3, when it is covered by 17 to clause 4. Same logic will be applying in all the perquisites. We are going to discuss how many points here? 7 points. In each one of them, we have to apply the same logic. So if you have an iota of doubt, smallest of the doubt right now, please do ask. Otherwise, you will be facing difficulties in next 6 perquisites also. This much should be very much clear to you. If it is employee's obligation to pay, it is covered by 17 to clause 4. If it is covered by 17 to clause 4, it is taxable for specified as well as non-specified. On the other hand, if it is employer's obligation, if the connections are in the name of employer, it is employer's obligation. But in this case, employee is just enjoying a facility. This will be covered by 17 to clause 3 will be taxable only for specified. It will not be taxable for non-specified. So let's proceed further in this now to understand taxable value of perquisite. How to ascertain this taxable value of perquisite? For that, you have to see whether this gas, electricity, water supply which is supplied, whether this gas, electricity, water which is supplied by, which is supplied to you, is supplied by employer from his own sources, or employer is providing you this facility by taking from someone else. For example, which is the company which is supplying electricity in the city of Chennai? In the city of Chennai, which company is supplying electricity? Is it a government company? I think it is Tamil Nadu Electrical Board. Yes? Tamil Nadu Electricity Board. TNEB, yes, TNEB. TNEB stands for what? Tamil Nadu Electricity Board. Yes? Okay. Now listen to me very carefully. For example, you are an employee of Tamil Nadu Electricity Board. You are an employee of Tamil Nadu Electricity Board and they have provided you an accommodation to stay. They have provided you an accommodation to stay. In that accommodation, there will be an electricity connection. Na? In that connection, who will supply the electricity? Tamil Nadu Electricity Board, will they supply the electricity from their own source or they will purchase this from someone and give it to you? Definitely they will supply from their own source because they themselves are generating electricity. Are you understanding? So whenever your employer itself is engaged in supply of gas, supply of electricity, supply of water, he will provide you these things from his own sources only. But Tamil Nadu Electricity Board is not in the business of supplying water. It is just in the business of supplying electricity. So, accommodation has been given to you by the Tamil Nadu Electricity Board. In that accommodation you are staying, electricity is supplied by your employer Tamil Nadu Electricity Board. But that water connection and cooking gas connection, water and cooking gas is supplied, that is not supplied by Tamil Nadu Electricity Board. That is supplied by someone else. And your employer might be paying bill to them. So that we say it is supplied from third party. It is supplied by other agencies. Have you understood the difference? This facility is provided from own sources and this facility is provided through outside agencies. If this facility is provided from own sources, now, see, perquisite value is very simple. Amount incurred by employer minus amount recovered from employee. This will be applied at more than 80% of the places. Here also we have to apply that only. But my question to you is, say for example, 1 unit of electricity is generated or manufactured by Tamil Nadu Electricity Board at a cost of 5 rupees. 1 unit of electricity, the generating cost is 5 rupees per unit. And they are selling to the customers, they are supplying to the customers at say 9 rupees per unit. 9 rupees per unit. I am just giving an example, I don't know the rates. I am just giving an example. The electricity generation cost for Tamil Nadu Electricity Board for 1 unit of electricity is 5 rupees and they are supplying this electricity to customers at 9 rupees. Now my question is, Tamil Nadu Electricity Board has given you an accommodation to stay. In that you are having an electricity connection, you are consuming electricity, you are using electricity for your personal purposes. Throughout the month, you have used, say for example, 1000 units of electricity. 1000 units of electricity. Now the question is, this perquisite should be valued at what price? 1000 units multiplied by price per unit. But that price per unit should be taken at which price? Should we take the cost of the employer, that is 5 rupees, or the price at which the employer is selling to general public, that is 9 rupees. So government says you take the cost. You take the manufacturing cost of your employer. So here the per quid value, if the facility is provided from employer's own source, then the per quid value is manufacturing cost of employer. This is also nothing but amount incurred by employer only. This is what is the cost he is incurring. So manufacturing cost of employer minus amount recorded for employee, balance is taxable value of per quid. Whereas if it is provided, these facilities are provided through outside agencies, then your employer might be paying bill to them. In that case, it is amount incurred by employer. Amount incurred by employer is nothing but amount of bill paid to the outside agency minus amount recorded for employee, balance is taxable value of per quid. Balance is taxable value of per quid. Have you understood this very clearly? Yes. See, intentionally I have taken lot of time in this gas, electricity, water supply connection facility. Intentionally, it is too small, but intentionally I have taken a lot of time to make you understand clearly the distinction between 17 to class 3 and 4, to make you understand clearly when the per quid will be taxable, in whose hands it will be taxable. Now, next point onwards, our speed will be higher as compared to this point. If any one of you are having doubt in this point, please do ask. From my side, I have completed this gas, electricity and water supply facility. Next is point number 2, domestic servant facility. Domestic servant facility. First of all, who all are covered by the term domestic servant? Number 1, sweeper is covered by domestic servant. Sweeper is considered as domestic servant. Gardener is considered as a domestic servant. Security guard, watchman is considered as a domestic servant. Personal attendant, for example, employee is a disabled person. He will always be on a wheelchair. So there might be some person along with him to support him at any point of time. So employer has hired that person. That person is called as personal attendant. He is also a domestic servant. Besides this, you can also say that cook is also a domestic servant. Cook, the person who is making food for you, cook is also a domestic servant. Cook is also a domestic servant. So who all will be considered as domestic servant? Number 1, sweeper. Number 2, gardener. Number 3, watchman, security guard. Number 4, personal attendant. Number 5, cook. Don't tell me driver. No, driver is not a domestic servant. He is not going to ride a car in the house. So he should not be considered as a domestic servant. But driver facility will be discussed along with the motor car facility. So driver facility should not be taken here. So all these people will be considered as domestic servant. Now there are two possibilities. Possibility number 1, these domestic servants are appointed by employee. Say for example, you are residing in your own house. In your house you have appointed a domestic servant. You have appointed a domestic servant. It is whose obligation to pay salary to domestic servant? It is your obligation only. It is your obligation only. What if your employer is paying salary to the domestic servant directly, or you are paying salary to the domestic servant and thereafter the employer is reimbursing that salary? In both this case, we can say that the per quid is covered by section 17, subsection 2, clause 4. If it is covered by 17 to clause 4, then that will be taxable in case of specified as well as non-specified employee, because it is in the nature of monetary benefit given to employee. So if the domestic servant is appointed by employee, that will be covered by 17 to clause 4. It is taxable for specified employee as well as non-specified employee. On the other hand, if the domestic servants are appointed by employer, Say for example, employer has given you accommodation to stay. In that accommodation, you have a servant, separate space or separate room for the servant to stay. And your employer has already appointed a cook as well as helper for you. In that case, we say that domestic servant is appointed by employer. Employer will pay remuneration to that domestic servant and you are just enjoying the facility. In that case, the situation is covered by 17 to clause 3. If you are a specified employee, yes, it is taxable. If you are a non-specified employee, it is not taxable. So once again, applying the same logic, who has appointed, in whose name these connections are, so same logic you have to apply. So we have understood when it will be covered by 17 to clause 3, when it will be covered by 17 to clause 4. When it will be taxable, when it will not be taxable. If it is in the nature of non-monetary benefit and if the employee is a non-specified employee, it is not taxable. Now, part 2, if it is taxable, what is taxable value of perquisite? It is very simple. Amount incurred by employer minus amount recorded for employee. What is amount incurred by employer here? Whatever amount of salary of domestic servant is paid by employer, that is nothing but amount incurred by employer. So you write amount incurred by employer minus amount recorded for employee, balance is taxable value of perquisite. And what is amount incurred by employer? It is nothing but salary of domestic servant paid by employer. Salary of domestic servant paid by employer. Shruti madam has asked me some doubt. I'll be taking up that doubt once we complete this domestic servant entirely. I need to just now explain you the note given here. Now listen to me very carefully. I am explaining you the note. Note is in respect of gardener. Note is in respect of a gardener facility. See, domestic servant facility is separately taxed in 17 to clause 3 as well as 17 to clause 4. Wherever it is covered, domestic servant facility is separately taxed. And you know that gardener is also a domestic servant. So that gardener facility will also be taxed. But government says that there are two possibilities. There are two possibilities. Here we are talking about the gardener facility. We are talking only about one point now. We have done the discussion of all the domestic servant facility. Now we are extracting one point, gardener facility, and we are having a special discussion on this. Gardener facility. Government says there are two possibilities. Possibility number one. Possibility number 1 and possibility number 2. Possibility number 1, employer has provided accommodation. Employer has provided accommodation to employee. This is one possibility. And another possibility is employer has not provided accommodation to employee. So employer has provided accommodation, employer has not provided accommodation. We are having two possibilities. Now government says if employer has provided accommodation, if it is rent-free accommodation, Shruti, Redmi, these people are asking me question, I'll resolve the doubt. I'll definitely come to your point, I'll appropriately resolve the doubt. First, let me complete this note. Employer has provided accommodation, then that accommodation will be taxable to you in section 17 to clause 1 or 17 to clause 2. If employer has provided you accommodation then accommodation value is taxable either as per 17 to clause 1, 17 to clause 2. Here government says this gardener facility will not be taxed separately. Will not be taxed separately. So, this gardener facility separately will not be taxed. You consider that gardener facility is already covered by the valuation of accommodation. Whatever valuation of accommodation by applying the provisions of section 17 subsection 2 clause 1 and section 17 subsection 2 clause 2, in that gardener facility is automatically covered. No separate tax on you for gardener facility if accommodation is provided. If accommodation is provided along with the gardener facility, no separate tax on gardener facility, only accommodation value will become taxable to you as per 17 to clause 1 or 17 to clause 2, whichever is applicable. But if employer has not provided any accommodation to you, if employer has not provided any accommodation to you, he has only provided you gardener facility. He has only provided you gardener facility. In that case, this gardener facility will be separately taxed. Will be separately taxed. Have you understood this point very clearly? Yes or no? There is no need to write, it is already written in the form of a note. So, conclusion is what? If accommodation is provided along with that gardener facility is provided, then no separate tax on gardener facility. But if accommodation is not provided, only gardener facility is provided, then yes, gardener facility should be independently and separately taxed. That is what is written in a note. Read this. If an employer provides rent-free accommodation owned by employer to his employee, then expenses inclusive of salary of gardener incurred by employer on maintenance of garden and ground attached to the house is not a taxable perquisite, or it is not taxable separately. It is not taxable separately. Is that very, very clear? Yes. So from my side, this point number 2, domestic servant facility is also over. Now I will be taking up the doubts which are asked to me. Shruti had asked me the doubt, sir, if it is not taxable, in whose hands it is taxable, under what section? Shruti, if it is not taxable in anyone's hand. What can be taxed? Income can be taxed, na? Income can be taxed. Expenses cannot be taxed. So if your employer has incurred some expenditure for your benefit, that expenditure is an expense for employer, while computing his business income, he will claim deduction for that expense. And this benefit is offered to you. But government says this benefit is not taxable. Not taxable means not taxable to anyone. But when we talk about taxing or not taxing, we are only thinking about that person who has earned it in the form of income. Yes or no? So entire chapter we are discussing from employee's point of view only. If we say that it is not taxable to employee, means government is not having an intention to levy the tax. Why? Because employee is a non-specified employee, small employee. Have you understood? Or do you want me to give you an example? Yes? Shall I proceed? Now second doubt, Redmi has asked me. See, if you want me to give an example, then tell me, I'll give you the example. Redmi has asked me the doubt, sir, explain salary borne by employer. Redmi, what do you mean by salary borne by employer? Salary borne by employer means amount of salary of domestic servant which is paid by employer. The amount which is paid by employer, or amount is paid by employee, thereafter it is reimbursed by employer. In that case, we said salary is borne by employer. If you recollect the chapter of income from house property, you got the deduction for municipal tax, na? Provided municipal tax is paid and borne by owner. So there we had discussed four possibility, na? Municipal tax is paid by owner, subsequently recovered from tenant. In that case, we said that municipal tax is not borne by owner. Yes or no? So when we say borne by owner, means either it is, when we say borne by employer, we say that salary is either paid by employer to domestic servant, or it is paid by employee to the domestic servant, and subsequently it is reimbursed by the employer. In that case, we say it is borne by employer. So we have covered this point number 2, domestic servant facility. Now before we move on to next point, let's go through this question number 12. This question number 12 is from the ICI module. Ditto same question you are having in the module. Such question can be asked in the examination for 2-3 marks. It says Mr. Rohan and Joy are employees. Mr. Rohan and Joy are employees working with Infotech Limited. Working for Infotech Limited. As per salary fixation norms, following perquisites are offered to them. Number 1, for Mr. Rohan, who engaged a domestic servant. Now my question to you is, don't read the sentence further and tell me who has appointed the domestic servant. Who has appointed the domestic servant? Domestic servant is appointed by employer or it is appointed by employee? It is appointed by employee. It is appointed by employee. If it is appointed by employee, it is whose duty or it is whose obligation to pay salary to domestic servant? It is employee's obligation to pay salary to the domestic servant. In this case, we say that there are two possibilities. If this salary to the domestic servant is paid directly by the employer to the domestic servant, or if it is paid by employee to the domestic servant, subsequently it is reimbursed by the employer. In both the cases, it is covered by which section? It is covered by section 17, subsection 2, clause number 4. And since it is covered by section 17, subsection 2, clause 4, it is taxable in case of specified as well as non-specified employee. So for Mr. Rohan, who engaged the domestic servant for 500 per month, his employer reimbursed. See, the word reimbursement is appearing here. The moment you see the word paid by employer or you see the word reimbursed by employer, what should click to your mind is 17 to clause 4, taxable for all employees. The entire salary paid to the domestic servant is reimbursed by employer at 500 per month. So what should be taxed in the hands of Rohan is 500 per month multiplied by 12 months, that is 6,000. Irrespective of whether Mr. Rohan is a specified employee or non-specified employee, in both cases 6,000 should become taxable to him. Is that very, very clear? Yes or no? Yes. Let's move on to point B. For Mr. J, he was provided with a domestic servant facility. He was provided with a facility. What is the meaning of this? He was provided with a facility. Means what? Who has appointed the servant? Servant was appointed by the employer and this servant facility is provided to employee. If this servant is appointed by employer, it is whose obligation to pay servant's salary? Employer's obligation. Who would pay? Definitely employer will pay. In this case, employee is just enjoying the benefit. In that case, we say it is covered by 17 to clause 3. It will become taxable only if Mr. J is a specified employee. If Mr. J is non-specified employee, this will not become taxable. So Mr. J, he was provided with a domestic servant at the rate of 1000 rupees per month as part of his package. As part of his package means as part of his remuneration terms and conditions. So this will become taxable to Jay only if he is a specified employee. Further, it says you are required to comment on the taxability of above in the hands of Mr. Jay and Rohan, who are non-specified employees. Who are non-specified employees. So what is the answer for point A? It is taxable. It is taxable because it is covered by 17 to clause 4. It is taxable in case of specified as well as non-specified. But what is the answer in case of point number B? It is not taxable. Why it is not taxable? Because it is covered by 17 to clause 3 and it is taxable only in case of specified. But Mr. Jai is not a specified employee. Therefore, it is not taxable. Have you understood this very clearly? So we have covered this. Still we have 10 minutes time. So we'll complete this education facility also. Gas, electricity, water supply is over. Domestic solar facility is over. We'll complete the education facility and we'll wind up. And evening session, our target would be to complete remaining 5 points. And the chapter of income from salary will come to an end. So tomorrow morning onwards, we'll be starting with the chapter of income from capital gain. And if you income from capital gain will go for around 3 days. So it is around 18 to 20 hours of discussion, income from capital gain. If you miss first 2 hours or 2.5 hours discussion, then chapter is gone for you. You don't have any other option than to leave it an option. So it is very important. Tomorrow morning session of income from capital gain around 2.5 hours, whatever it is. First session 7 to 10:30, same time will be there. That section if you miss, then skip the entire chapter. You can leave it in option because you will not be in a position to understand anything. You will not be in a position to do anything. You will not be in a position to start the solution also. So don't miss tomorrow morning's lecture. Definitely today evening lecture is also important because we are going to discuss the motor car facility. So let's move on to the third and the last point for the day. Actually, this is an education facility. This is an education facility, but I have tried to cover all points with respect to education wherever they are appearing in the entire chapter. Therefore, a heading if you see I have written education facility, but here I have written different forms of benefit with respect to education. Different forms of benefit with respect to education. Left hand side, first point. This is our point number 3. Left hand side, part 1. Part 1. Fixed allowance. If you recollect, this we have discussed, part 1. Fixed allowance. Children education allowance. What is the amount specified? 100 rupees per month per child, maximum 2 children. And here you should remember that important point, whether the examiner is using the word per month per child or is just using the word per month. In both cases, the answer will be different. Then we have point number 2, hostel expenditure allowance. Exempt up to 300 rupees per month per child, maximum 2 children. So this is part 1, fixed allowance. This we have already discussed. Then we move on to second part, which says school fees of employees' children. Either it is paid by employer or it is later on reimbursed by employer. The moment you see the word paid or reimbursed, what do you say? This is covered by which section? It is covered by section 17 subsection 2 clause 4. It is a monetary perquisite. It is taxable in case of specified as well as non-specified employee. So here we say it is taxable under section 17 subsection 2 clause 4. That is, it is taxable in case of specified as well as non-specified employee. It is taxable in case of specified as well as non-specified employee. So this part 2 is also over. Let's move on to part 3. Part 3, listen to me very carefully. For example, you have completed your chartered accountancy. You have completed your chartered accountancy. Thereafter, you have joined a job with Infosys. You have joined an employment with Infosys. You have got a job with Infosys. You have completed your chartered accountancy. You are the master of accounts. You know everything in accounts. But Infosys is maintaining accounts in a software called as SAP. You know accounts, but you do not know the accounting software. So can you perform your job? Can you perform your job if you do not know the accounting software? Will Infosys hire one more person who is knowing a software and then you will say, I will tell the journal entry, ask him to pass in the software? No, no. What they will do? They will provide you a software training. So the moment you have joined Infosys, Infosys has sent to you for a SAP software training for 1 month at the cost of the company. They are paying you salary also and they have sent you for a training. So you will be getting a software training. Now this software training you get, definitely you will acquire new skill. You will acquire knowledge, you will acquire new skill. This is definitely beneficial to you. But my question is, this is more beneficial to you or it is more beneficial to the employer? Employer has provided you this training to enhance your skill or to ensure that you can perform well. It is for benefit of employer. Definitely it will benefit you also, but it is for the objective of you performing your duties efficiently. If you don't know the software, or you know the software partially, then you will not be in a position to perform your duty effectively and efficiently. That is the reason training is being provided to you. And this training is provided for the benefit of employer, not for your benefit. Therefore, we say in part 3, training or free education facility provided to employee is totally exempt from tax. Is totally exempt from tax because it is provided for the benefit of organization. It is not provided for your benefit. It is provided for the benefit of your employer. So there is no advantage to you and it will not be taxed to you. Is that very, very clear? Yes. So let's move on to the last part. Last part, education facility is provided. Education facility is provided. Where this education facility is provided? It is provided in employer's own institute. In other words, employer is owning a educational institute. For example, if you are aware, in India we have a city called as Jamshedpur. Jamshedpur city is more popularly known as Tata city. Instead of Jamshedpur, it is more popularly known as Tata city. If you go to Jamshedpur, they are having a Tata steel plant over there. And Tatas are having their own school, Tatas are having their own hospitals also. So if you are working as an employee of Tata Steel and you are being posted at Jamshedpur, then your children will go and get the education in Tata school. If you or your family member has fallen sick, has fallen ill, then he will be hospitalized in the hospital of Tata only. So employer is having hospital also, employer is owning a educational institution also. So employer has provided a education facility in his own institute or a tie-up institute. To whom this education facility is provided? This education facility is provided to member of household. What do you mean by member of household? You know, member of household includes number 1 spouse, number 2 children and their spouses, number 3 parents, and number 4 servants and dependents. So, if some education facility is provided to these people, how the taxability provisions are there? For understanding the taxability provision, we are dividing the member of household in 2 parts. Number 1 children and number 2 other members. Children, we are segregating them separately. Education facilities provided to employees' children and education facilities provided to any other member of household. Other member can include spouse, parents, servants and dependents, children's spouse, etc. For children, government is having some soft corner. So government has made some exemption rules. So if the education facility is provided to employees' children, in which institute? Employer's own institute or institute with whom employer is having a tie-up. In that case, we say that you see what is the cost of education per month per child. What is the cost incurred by employer for education of children per month per child? Per month per child. If the cost of education per month per child is less than equal to 1000 rupees, if the cost of education per month per child is less than equal to 1000 rupees, then this perquisite is totally exempt from tax. Then this perquisite is totally exempt from tax. Have you understood this much? Yes? Very important note. Very important note. See what the note is? No limit with respect to maximum number of children. There is no limit with respect to maximum number of children. Meaning thereby, say for example, Manoj is having 20 children. Manoj is having 20 children. All these 20 children, they are studying in employer school only. In school, employer has kept a separate division. In schools you have division, division A, division B, division C. So in school, a separate division is made, division Manoj. In that division Manoj, only Manoj's children will study. 20 children, all of them are studying free of cost. In that case, if the cost of education per month per child incurred by employer is less than equal to 1000, no tax will be levied. This perquisite will not be taxable. In other words, maximum limit for number of children, 2 children. That maximum limit is applicable in case of children education allowance, hostel expenditure allowance. That maximum 2 children limit is not applicable in this case. It is not applicable in this case. So we written here, no limit with respect to maximum number of children. Now we want to right hand side. What if the cost of education per month per child is more than 1000 rupees? What if the cost of education per month per child is more than 1000? Then the perquisite will be valued as per this. On the other hand, if the education facility is provided to any other member of household, then also a perquisite will be valued as per this rule only. What is this rule? The moment cost of education per month per child, in case of child, the moment cost of education per month per child exceeds 1000, then the perquisite is taxable. But for the purpose of valuation of perquisite, what cost employer has incurred, you don't take that cost into account, because since the employer is incurring cost, he is having his own school, he is incurring the cost, so there are chances that he may manipulate the amount. He may spend 5000 and he may say that I have spent only 2000 with the intention to save employees tax. Therefore, government says the moment cost of education per month per child is more than 1000, you forget about the amount spent by the employer, amount incurred by the employer. You look at what is the cost of education in a similar institution in the same locality. In the same locality, you might be having some other schools also, Those other schools are charging what amount of fees? You look at that amount. That is called as cost of education in a similar institution in the same locality. Don't compare with other localities. If employee's child has been provided education facility in the city of Chennai, you can't compare with schools in the Mumbai. They are not comparable. So in the same locality, you see which are the other educational institutes, what fees they are charging for the same education. You take that fees. From that, you deduct amount recovered from employee. You deduct amount recovered from employee. Balance is taxable value of perquisite. Balance is taxable value of perquisite. Now, with this education facility is over. But I want to highlight a very important point here. If you recollect, free meal and refreshment, there we used to see cost per meal. If the cost per meal was less than equal to 50, then it was totally exempted from tax. And if the cost per meal was more than 50, then we used to take cost per meal. From that we used to deduct 50 rupees as exemption. Then we used to deduct amount recovered for employee, and balance was taken as taxable value of perquisite. So if the cost per meal is more than 50, 50 was deducted as a exemption. Here, if the cost of education per month per child is more than 1000, then you are not required to deduct 1000 rupees per month as exemption. In other words, the moment cost exceeds 1000 rupees per month per child, entire cost will become taxable. You will not get 1000 rupees as exemption. Are you understanding? The point which I explained right now, this 1000 is not a blanket exemption. If the cost incurred by employer is more than 1000, in that case 1000 will not be given to as exemption. It is not like a standard deduction. That is what Punjab and Haryana High Court explained in the case of Delhi Public School versus Commission of Income Tax. This case law is given in CA final module, not given in CA intermediate module. So I am just giving you that, saying that if the cost of education per month per child is more than 1000, then 1000 rupees will not be given you as a standard deduction exemption. Entire amount will become taxable. This is what is decided in Delhi Public School versus Commissioner of Income Tax case law and decided by Punjab and Haryana High Court. Is that very clear? So with this, we have completed this education facility also. So we will wind up our session here. Evening, today afternoon, what time it is? 2 to 5. So we have completed 3 points. Afternoon session will complete the remaining 4 points and will also complete the relief under section 89. So this chapter will be over. Regarding the doubt I has asked earlier, so if not taxed here, should not government collect from someone else? Because in the earlier concept you had mentioned that. See, I don't remember which earlier concept you are talking about, but it is not necessary that government will levy tax in all situations. Sometimes government also have an intention to provide the exemption. So sometimes government also have an intention to provide you some benefit. So in that case, government says that we will not levy the tax. I will tell you specifically in the chapter of income from salaries. Whenever 3 things are involved, government will either not try to levy the tax, or if at all they try to levy the tax, they will try to levy the tax on the minimum possible amount. Number 1, whenever your child is involved. Number 2, whenever food is involved, and number 2, whenever your health is involved. So child, food and health, these 3 things in the chapter of salary, they will try to not levy the tax. If at all they levy the tax, they will try to levy the tax on the lower amount. So it is not necessary for the government to levy tax in all the situations. And please understand, I do not think with which point you are trying to connect this, but I think that you might be connecting it with the chapter of PGBP. In the chapter of PGBP, I had explained you that while you are making payment to someone, that payment is an expense for you, and you are expected to deduct TDS and pay to the government. If you don't deduct TDS and don't pay to the government, then amount of expenditure will be disallowed to you. It will be added to your income, as a result of which your income will increase, your tax liability will increase. So whatever tax you have not deducted and paid to the government, to that extent your tax liability will increase. So government will get tax from you tax from you only. So whatever TDS you have not deducted, that amount will be, that expenditure will be added to your income tax will be levied. If you are trying to connect this point with that PGBP, then it is not necessary that 2 points can connect with each other. Now, Bretley example also I had given 3 or 4 times. Can you tell me specifically or you do one thing, think about it what you want to ask, 2 situations or 2 concepts, which 2 concepts you want to connect. So do one thing, you refer the notes and you find out, yes, you refer the notes, you find out those 2 topics, then you frame the question properly and you drop me the message on WhatsApp. I will respond. Okay. Next, I need to explain this transfer of movable asset to Sarvanna. Rizwan says gardener is not taxable separately in rent-free accommodation. Watchman and cook is taxable. See Rizwan, what happens is, if gardener facility is given to you along with accommodation, and you come to know that gardener facility will become taxable, in that case you will say to your employer, I don't want gardener facility, I will maintain the garden. You will say to your employer that I don't want gardener facility, I will maintain the garden, and then later on you will not maintain the garden. And if the garden is not maintained properly, the property will lose its value. That is the reason why government says gardener facility will not be taxable separately if accommodation is provided to you. Rizwan, understood? Okay. Next is so whenever employer has given you asset, either free of cost or he has given you asset at a concessional price, in that case you have to make a working note the way you used to make in depreciation chapter in accountancy. You take the original cost, from that you deduct a depreciation from the date of purchase of asset by the employer till the date asset is transferred to you. That period you have to calculate in number of years, number of months and number of days. In that, months and days you have to ignore. You have to take only completed year. And for that many number of years, you have to deduct depreciation. Once you deduct depreciation, you will arrive at the amount of WDV. Now say for example, asset having a WDV of 1 lakh is given to an employee only at 20,000 rupees. So asset whose WDV is 1 lakh is received by you just at a cost of 20,000. So what is your benefit? 80,000 is your benefit. So 80,000 will be considered as taxable value of perquisite. It will be added to your income and tax will be levied. Second possibility is WDV of asset is 1 lakh and employer has recovered 1,20,000 from you. So employer has recovered more than WDV. Asset having a WDV of 1 lakh, if you acquire from the employer at a cost of 1,20,000, then you have not got any benefit. In fact, you are at a losing end. So in this case, perquisite value will be 0. While you calculate depreciation, you have to keep in mind the rate of depreciation as well as the method of depreciation. Computer and electronic item rate of depreciation will be 50%, method will be WDV. Motor car rate of depreciation will be 20%, method will be WDV. In case of other assets, Rate will be 10%, method will be SLA. Yes, is that clear? What all things are included in electronic items and what all things are not included in electronic items, they are also given here. But in calculation A, 2000 valued. Where calculation A? Question number 11A you are asking. 11A na? Yes, 11A. 11A, it is not only transfer of movable asset. It is not only sale of asset. It is use of asset as well as sale of asset. Please understand. What it says point A? He is allowed to use the camera. And next sentence also says the camera was sold to him. When camera was sold to him? It was sold to him on 1st October 20. Your previous year starts when? April 20. So from April 20 to September 20, who was using the camera? Employee was using the camera, correct? So for those 6 months, you have to do the valuation as per this point, use of mobile asset. Camera will fall into any other asset category. You have to take depreciation at the rate of 10% per annum of actual cost. What is the actual cost? 40,000. Of that you take 10% per annum is how much? 4,000. But that 4,000 is for the entire year, na? You have used the camera only for 6 months. So 4,000 to 6 upon 12 will give you 2,000. So that 2,000 is the perquisite value for using the camera for 6 months. That 2,000 is the perquisite value for using the camera for 6 months. Have you understood this? For this use, perquisite value is 2,000. Now, this camera is sold to you in the month of October. See, once the camera is sold to you, you are the owner of the camera, you are going to use it for your entire life. You using your own camera is not a benefit to you. But this camera is sold to you at a concessional price, na? It is a benefit. What price camera was purchased by your employer? 40,000. How many years your employer owned the camera? For 4 years. For 4 years. So camera will fall into this any other asset category. You deduct 10% depreciation per annum by SLM method. So for 1 year depreciation is 4,000. For 4 years it will be 16,000. So deduct depreciation of 16,000 from 40,000. You will arrive at the amount of 24,000. And this camera is purchased by you at a price of 20,000. So camera having a WDV of 24,000 is purchased by you at 20,000. So 4,000 is your benefit. 4,000 is benefit for sale of camera. 4,000 is benefit for sale of camera. So total benefit is 2,000 plus 4,000, that is 6,000. Yes, is that very clear? B. Point number B. Employee is not using the car. The company had purchased the car on 16 July 16 for 5 lakhs. The car is sold to R on 14 July 20 for 120. Car was not used by R, means you have to apply only this valuation of perquisite in respect of sale. And you have to take depreciation for how many years? You have to take depreciation for completed years only. On which date this car was purchased by your employer? From 16th July 16. On which date this car is sold to employee? 14th July 20. Now you tell me, from 16th July 16 to 14th July 20. It is how many years, how many months, and how many days? Which notes you are talking about? Which notes, yeah? The notes which are appearing on screen, which I have written. Textbook, textbook. Textbook, Yes. Okay, once again. Which page you are looking at? I can't see anywhere. 558. Oh, 58. So 58 page it is question, na? Where is the solution? Sarvanna, what has happened to you? Did you have the breakfast properly? I did the calculation, na? You want to see the calculation, na? You tell me, I'll show you. See, this is the calculation. This I have deducted depreciation for how many years? 3 years. Where I have deducted depreciation for 4 years, yeah? This is 1 year, 2 years, 3 years. How 3 years? That's what I told you, na? This asset was purchased by your employer on which date? You have to start calculating your year from the date of purchase of asset by employer. You have to take the period from the date of purchase of asset by employer. Oh, 16 July 16. Very good. So from 16 July 16, on which date 1 year will get completed? 1 year will get completed on 15 July 17, na? So for this year I have deducted depreciation. This is my first year. Second year is from 16 July 17 to 15 July 18. Yes or no? You will complete 1 year on 15 July 17. You will complete 2 years on 15 July 18. And you will complete 3 years on 15th July 19. If you take one more year from 16th July 19 to 15th July 20, but you have transferred the asset before this date, na? The asset was transferred from employer to employee on 14th July 20. So before completion of the year only it is transferred. The fourth year is not complete, na? And we have to take depreciation only for completed years. We have to take depreciation only for completed years, na? This year is incomplete. Part of the year should be ignored. Yes. So we'll wind up here. Rizwan, you are having any doubt? Yes, yes. One day also should be taken into account. You should see one day also. Yes. Intentionally such question is drafted. Intentionally such question is drafted. Perquisite in respect of gas provided from own sources, in this case, employer manipulate or not. See, These big giant companies, now their books of accounts are audited. Manufacturing companies, they also have to do cost audit. They also have to do cost audit, na manufacturing companies. So it is difficult for them to manipulate the cost. I personally believe that no company is going to do something which will save employees tax. Why they will do such things? What is benefit for the company? There is no benefit to the company in doing so. Yes, if employee is working at a very high position, director position, etc., company may do such things. Otherwise, company will not do such thing for ordinary employee. Yeah? Company is not benefited out of that. So I don't think that company will manipulate. That is what government is also thinking, that they will not manipulate the cost. That is the reason government has taken the manufacturing cost. So we wind up here. We'll meet at afternoon. Goodbye.